Morning all. How are we all doing? Excuse me. Got frog in my throat. Hang on. Morning. How are we doing? Right. First day back for a few days. So I'm going to do a quick, well, not quick, but a full rundown of all the charts this morning. Do a quick recap of yesterday and obviously have a look at what we've got for this week as well. Excuse me. So I've just got, if you don't know, I'm not in the Telegram group. I've just had a bout of cold, so I'm just getting over that at the minute. So just a quick overview of news. So this week we've had quite a lot of news released so far. Obviously, we've had some fairly decent movement, nothing dramatic. There's a lot of sideways on the indices this week so far. We've had a fair bit of volatility. The main morning, Mohammed. The main news we've got coming up this week is the autumn forecast from the pound, which is tomorrow morning. I think, well, it's normally about lunchtime-ish. I think 12 o'clock. So that's what we're kind of hanging on for, I think, at the moment. There's a lot of news coming out today. We've just had the CPI, the inflation figures for the pound, which was a dramatic increase on expectation. Not really any movement of the pound, though. So I think even though that is a massive hit, you know, it's 11% on a forecast of 10.7. The market's not going anywhere until we get this autumn statement out of the way, because what is said tomorrow will have a big impact on inflationary figures. So I think that's the reason we haven't had a lot of movement off of that this morning. Morning, Diamond. Back to it. So yeah, so that's not really had a lot of impact this morning. We'll wait and see what happens when London really kicks in. Frankfurt's opening in 5 minutes. We'll wait and see what happens when London opens, and we might get some decent movement. But we would expect off the back of a figure like that to get a positive push on the pound. Inflation is good for currency, but not good, obviously, for us, for general people, and recession. So it has it's a double-edged sword. We've got the ECB stability review this morning as well, which unlikely to do anything unless Lagarde said as anything off the back of that. But this afternoon, 1:30, we've got the CAD CPI figures as well. Again, possibility of some decent strength off the CAD off the back of that. And then we've got retail sales for the US dollar. So that could go either way, obviously. Monetary policy report hearings this afternoon as well. Got Lagarde speaking. We've got G20 all day. Russia's just bombed Poland. There's a lot going on. So we will see what happens today. But anything can happen. Aussie dollar tomorrow as well. We've got the unemployment rates there, but that's the big one we're waiting for. And then we've got Philly Fed, and then it's all over. So tomorrow really is what we're needing to focus on at the moment. Yesterday, obviously, news-wise, there wasn't a lot overnight. Everything has been overshadowed by the, obviously, Donald Trump thing. Just ignore that. He's not getting in, is he? But everything's overshadowed by this missile that's gone into Poland, which is obviously a NATO country. So the one thing we don't want is any Russian aggression against NATO, because that starts basically World War III, isn't it? As soon as NATO's involved, we've got Russia against the world, basically, haven't we? So, and it will probably be over very, very quickly if that was to happen. But anyway, so that's kind of overshadowing everything at the moment. And the market yesterday, all the markets collapsed very, very quickly on that news yesterday. So if you look at this from a sort of higher time frame on normal price action, this is our sort of normal price action that we're seeing at the moment. That was the US news, and obviously that is the news of that hit. So morning, Themba. whenever you have anything to do with Russia, anything to do with escalation, immediately money's pulled out of the stock market. So we had that. I'm quite surprised actually it wasn't bigger, but it was just a news event. There was a missile seems to have hit Poland. No idea where it's come from. The assumption obviously is automatically to go to Russia because obviously they're firing all the missiles, but it isn't necessarily them. It could be one that just went off accidentally. It could be one that Ukraine shot down. But obviously you can see the markets went nuts when that happened. So stay tuned for that today. Article 4 has been invoked by NATO, which is them meeting to discuss. Article 5 is off we go to war. So today is quite a critical day as far as that lot is concerned. Obviously, I've not been trading very much this week. I had obviously flat day on, when was that? What day of the week are we on? Wednesday, aren't we? Monday. Yesterday, yeah, did 6.4%. So I'm just going to quickly run through what happened yesterday. So I closed out a few trades. So oil, we had a big spike on oil yesterday. I had a few positions on that one. That was one I took obviously last week, but I've been scaling into oil on the pullback basically here. So looking for next leg on oil to start. So we've broken the high, new market structure is in place. We put in a new low, looking for that higher high to come in on the way to the $100 to $110 a barrel. We got up to a double top and bounced back. So I started scaling in on this pullback with a view to, obviously, you can see I've got the fib on here. So I don't want this level invalidated because that invalidates market structure to the upside. So looking for some kind of pullback here. So I been scaling in basically, waiting for next leg to start. And obviously then we had a big drop down. So I got in a bit too heavy and too fast on this one. So yesterday I scaled out of a couple of the positions. So you can see I've got one, that's a buy stop. Sorry, that's not a position. I've got one there. I've got one there. Had one here, so you can see I've been scaling in as we've been coming down this drop. One there which is a bit too close, and then I had another one down here. So my spacing was actually, it's 18 pips is half an ADR. That one's 10. That was 15. That was way too close. So that one and that one were properly spaced. So what I decided to do, obviously we had the push yesterday afternoon. So I took 3 positions off. I banked all of those. And as we're coming down, I'm looking to get one more on now, actually. Just going to take one here. I haven't got the EA running on oil, I don't think. Let me just check. God, I'm so out of touch with what's going on at the moment. Yeah, I haven't got the EA running on oil, so I'm just going to have to manage this one manually. So I'm just going to take one more position there. So just had a reversal alert this morning. So looking for basically pullback on that move on the M5. If you look at it on M15, it's a deep, sorry, M15, you need to go to hourly really to look at it. This is obviously a bigger pullback on this bigger move. So yeah, looking for that to push. If everything gets escalated in Ukraine, oil prices are going to go through the roof because obviously we will have a much bigger demand for oil all of a sudden if world war starts, or if anything escalates basically, and supply will obviously become constricted. So demand goes up, supply comes down, prices go through the roof. So holding oil at the moment, I'm going to add into the oil position as we break this high with a view to obviously coming up here, which would be then a triple top. There is obviously the possibility of coming down and retesting these lows as well, which is 150 ADR today. So I don't think we get there today, but stranger things have happened, obviously. So yeah, so I got out of a bit of oil yesterday. What else did I get out of yesterday? Euro, US dollar. I got out of a couple there. Nope, got out of one there. Sorry, only one. So scaled in. So that was the initial position, looking for basically to come down into this propulsion gap. So initial position, the EA took another position and I took a position manually. The EA didn't trigger, and I wasn't sure if I had it running. I had to check. So I've been so clouded for the last couple of days. Morning, Stevie. Yes, I have survived. Feeling a lot better, actually. So yeah, so got in there, got in manually because I didn't think the EA was running. Then I looked and I said, well, the EA is running. Why hasn't it triggered a trade? Then I measured it and it wasn't quite far enough away. Then we got on a reverse alert. Then the EA triggered. So I had two positions again, too close together. So I took one of those off on this drop yesterday. And we pushed back up again today. So I've just got the two positions on this one still at the moment. Break evens, obviously, a couple of pips and a couple of candles away. But we've literally gone nowhere. And again, I think we're all waiting for that pound autumn statement tomorrow. Euro Swiss, EA took a trade for me. This was a beauty. EA took this one for me yesterday. This is lovely. I was asleep in bed, right? Closed up on night nurse. EA took this trade on the reversal alert. I woke up and I was like, oh, that's nice. And then it got me out. So literally, I was asleep. Lovely, isn't it, making money while you're asleep? So I had that one shot straight down to support out. Nice easy one. And then the DAX. So the DAX is where I made most of my money yesterday. Most of this is probably about 3.5%, 4% of this is DAX. So I obviously we had this big push up. I had some DAX positions on, as you can see. I got in way too heavy on this. So I was expecting, let's just look at the daily chart so we can see what my plan was on this. So as you can see, with all the indices, we know we're in a bear market. Yeah, we're going down. We are in a recession. Everybody's now announcing they're officially in recessions if they were denying it before. So the market is coming down. We know that. Next leg is what I was looking to start. As we were pushing obviously down in this channel, we hit the 200 moving average as well. So it was all looking like earnings fortnight was over. It was all looking like we were starting to roll over. So I started to get into a position trade short on this. We then had this little bit of a push and hold. And then we had the news from the US, which sent the market through the roof. The US dollar tanked, therefore the stock market exploded. So this one took me up to somewhere around, and I think it was on Monday, I was looking at something around 9% drawdown on this, which was huge, too much. Mainly because I was way too closely spaced, as you can see. These were kind of scalps. I was expecting no more than a day or two of potential sideways or a little bit of upward movement before the collapse started. So I was in quite aggressive on it. As you can see, these are way too close together. I took additional positions as we started pushing up to get my average up. And then obviously this news went the wrong way. So this took me up to about 6 or 7% drawdown. I started a new position on Friday up here. And that brought my average up to, 175, 200 ADR away. It was miles away. So I started to scalp, and I took a scalp position on Monday up here, as you can see. And then I took another one down there. Let's look at the 15 minutes so you can actually see these. So yeah, so those are the two positions I put on. I put a scalp position on up there, which as we pushed up that massive candle, I took another position because it was a nice distance away from there. We pushed back down again. I added to that position. We came down. I was like, brilliant, this is it. We're on the way down to the gap fill. And then we gapped up. So as we pushed back down again, I added another one. So then I had 3 positions in profit. So I had these 5 all sitting there, hovering in and out of kind of profit for a good couple of days. And then we had the push up yesterday, and I added one more up there as I saw this rejection of the highs. And this was the news yesterday. So we pushed up, rejected, went sideways. As we pushed up in New York and started to come down, I added one more on. And then that happened, the Polish rocket. It's just pure luck, basically. And as that thing collapsed, I just basically got out of everything. So I got out of all these nice big scalpy positions here, which allowed me to get out of a decent amount of this down here. I've still got positions on. Obviously, got one there, got these two on as well, all in drawdown. But it allowed me to get out of all of this and bank a profit, because these were normal size positions. These were 0.3s and 0.5s. These were ones. These were scalp positions, which they basically had a 250 pip stop. I think it was something like that. Where are we? Yeah, so I think I put 250s on them. So they were larger positions, but with a very big stop. So it was a case of either this is going to hold and this is going to do that, and I'm out and I'm going to take a loss, or it's going to work and we're going to come back and hit that propulsion gap and obviously start next leg down, which is what I'm anticipating. Yeah, I'm anticipating a drop. We're in a recession. This is a big rally. Why the DAX is rallying quite so hard, I'm actually unsure. If you look at the DAX compared to the rest of the stock market in the US, the DAX is rallying way, way, way harder than everything else. It's very out of sync. So yeah, so lucky day yesterday. But I'm still in drawdown on this thing at the moment. As I say, it's more comfortable now. I'm a little bit overloaded on oil as well. But yeah, I'm happy with it. So I got 20% in the bank for the month. A lot of that was thanks, and I've said this many times before, you're going to get these and you milk them when you get them. It's a lucky trade. It's nothing to do with skill whatsoever. A rocket went astray, hit Poland, market tanked, gave me an opportunity to bank a load of cash. So I did. And I was asleep through this. I woke up. I don't know. I went to sleep. I went to sleep somewhere around here, and I was drowsy, and I was playing Candy Crush actually, and I fell asleep. And then I woke up about here, and it was like Jesus. So I took it. I could have got a lot more, but lucky trade. Anyway, so that's where I am. So at the moment, I've got Aussie Swiss. So I've got Aussie Swiss short, one position. I've got Aussie New Zealand long, 3 positions. So this is an old position. I was very nearly closed this out. This got into profit yesterday. I very nearly, or was it the day before? Monday? Yeah, Monday. I think it got into profit. I can't remember. But anyway, so yeah, I've not got a lot on this. I've got 2 tiny little hanger-oners. You can see, obviously, this position didn't go well. But I got out the vast majority there. So I've got this little 0.3 and little 0.4 orphan. I've got a normal position size on, which the EA's taken for me. So I'm just looking for a run up, and I'm going to shut this out. So this is really, trend's broken, and whether it's going to stick and continue up or not, I don't know at the moment. But yeah, I can get out of that. I can close it down now and just forget about it, but I'm going to be persistent with it. Euro US dollar we've covered already. I've got 2 positions short on that one. Away from US dollar strength. New Zealand CAD I've got long. A short on at the moment. Again, waiting for US dollar strength to power up the CAD. Obviously, if oil powers up, same thing will happen. So CAD's just obviously weakening off the back of US and oil. So those are not going to last for long. US dollar CAD. I've got 1 position on long on that. I've got 2 positions on long on US dollar CAD. So it's all very manageable at the moment. The only thing that's slightly worrying me is the DAX, which I'm much more comfortable on now, position size wise. But just making me uncomfortable. The strength of this move. This is such a big move, and we're in a recession, or we are entering into and accelerating into a recession, and the stock market is going up, which is not normal. And the thing that's confusing me is the DAX, the speed of the DAX compared to the US indices. They're out of whack. And I think somebody said in the Telegram group yesterday, I wasn't really paying any attention much yesterday, but the Dow was out of sync yesterday with the rest of the market as well. Yeah, I mean, you got a lot more movement on the US indices there, and obviously Dow much more sideways. So we're getting a little bit out of syncness here, and I think this is to do with sector buying. different sectors. We got a lot of motor sector in, and a lot of engineering, aerospace, that sort of stuff in the DAX, which we haven't got in the others. And I think those sectors are doing a little better. So that's probably the reason. And obviously tech sector, as we know, is getting crushed at the moment. But saying that, we had that big spike off the back of the US news. So that's basically US dollar weakness. So as soon as that US dollar kicks in again, we'll be rallying back down that way. So news-wise, from a catalyst perspective, obviously this afternoon we've got retail sales, we've got the CAD this afternoon as well. So there's a lot of news catalysts this afternoon. So we probably see a fairly sideways start, I would think, this morning. Opening ranges in. DAX is starting to come down again this morning. I'm not going to trade this morning. It's amazing how foggy trying to trade when you're ill. And this is a good point, actually, which I ought to cover. There's not many jobs out there that you do that when you get ill, you can't earn money. And this is one of them. So you have to think about that, and you have to bear that in mind when you're, if you're looking to do this as a full-time job. If I got struck down with COVID and went into hospital for 3 months, for example, can't pay the mortgage, can't pay the bills. You have to bear that in mind. Yes, you can set an EA up to hopefully trade for you, but if you were to go into a coma or something, for example, that's it. Normal jobs, you get paid, don't you, when you're ill? This is one of those where you don't. And also, it's one of those jobs you need focus and you need concentration. And if your head is foggy, it's very difficult to focus and scalp. If you're going to do scalping, obviously. So you've got to bear all that in mind. So, Mohammed, it's a dead cat bounce, or better said, last Fibonacci retracement, golden ratio before the collapse. I don't know what you're talking about there, but if you say so. That's obviously a comment to something I was looking at a minute ago. So let's have a quick look through the dashboards this morning. I'm tempted to take a little scalp on this. Talking about bullish move on the indices in a bear market. Yeah. But you can't have a dead cat bounce, can you, on a bullish move? That's the other way around, surely. It's a dead cat. It's a dead cat lifted up by a helium balloon and somebody shooting the balloon out. Bounce. So I know what you mean, though. Yeah. It's the thing. The other thing you have to understand about the indices, or you have to remember about the indices, is when we're in a recession and when we're in a bear market has to end, and a bear market obviously ends with a market structure break. That's what worries me, is that because the way the market is at the moment, to get a market structure break, even that I would class as a structure break. Yeah. And then to break a second high on the DAX is unusual, even in a bear market. There's a lot of strength there for a bear market, and it's slightly worrying, isn't it? They're getting that much strength, so it's just odd. But yesterday, we are officially, after this move, we are officially in a pause. Obviously, here you can see this is 4 days sideways, which is why I survived these DAX trades, because we didn't go anywhere. From when I entered the first aggressive position on Friday, we haven't gone anywhere. So I got in here, and literally all we did was go up and down for 2 days. And I was just lucky I got out of the Polish missile. But anyway, so yeah, looking for downward movement. So I'm just watching this to see if we get an opening range break this morning. We've got a little bit of a gap fill as well. We've got lots of gaps as well. If you look at this, if you look at the indices, We've still got, let's do it on the hourly. We've still got this gap here. And we have, sure we had another gap, did we not? No, we filled that. Yeah, so we got that one there, but we've still got this gap down here. You know, it's unusual to leave a gap. That one we left, and then the market obviously went for it, but that was off the back of the news. So this is a target still, but you know, you do get these gaps that get orphaned. Although obviously the market that we're in at the moment, I would be very surprised if that was the case. So one of two things today to look out for. Obviously, if you think about the candles we've got at the moment, that's what we're looking like. Yeah. So a retest of yesterday's high is a perfect short area. If we get an opening range breakout to the downside today, again, that's a really good trade opportunity as well. So see where we go. If we push up today, I wouldn't want to take a long. I'd be much more interested in trying to mean revert it from the highs up there. And I will do that, but we'll see what happens. Robbie, how do you take a DAX trade today? Just explain that. Good timing. Breakout only, gap fill. This is just the 2050. I don't use them. They're just on there because they're on there. I don't use them. Everybody else does. That's why I use them. But I don't actually trade off of them. But yeah, plan today would be retest of the highs. So if we move up to there, I'll be shorting from there. If we get an opening range breakout to the downside, I'd be interested in shorting that, although I am very closely into one. Play the gap fill, potentially. But, you know, I'm bearish. We're in a bear market. So I'm looking for long-term shorts. I've got these positions on as I'm holding these positions with a view for initially at least that propulsion gap being retested at some point, which is 200 ADR. So unlikely to happen today unless another missile goes into Poland. Or a missile comes out of Poland and goes into Russia. Who knows? One or the other. Either way, euro will collapse, indices will collapse. Any escalation in conflict, currencies are going to come down, and so are the indexes. So you don't want to be long, really, at the minute. But yeah, that's the play today. But we don't seem to be having a very vibrant open so far. So. But if we get an opening range breakout to the highs, I would leave it until there. You could scalp it up to the highs, obviously. Quick scalp, couple of candles up to the highs, but better play today is to get in there, I think, and wait for bearish price action to the downside. So running through the dashboards. Monthlies, we've got quite a lot lit up. Obviously, a lot of this is US dollar based. So a lot of stuff's moved outside of its normal monthly ranges. Obviously, a lot of that is US dollar based. We've got the pound US dollar. We've got the euro US dollar. Aussie US dollar. So a lot of US dollar stuff obviously has moved. But yeah, a lot of this stuff is worth looking at for potential mean reversions. So would you still be bearish if the index closes above the 200 SMA? Yeah, I don't use it. So yeah. I mean, there's two ways of looking at that, Robbie. You can, if you're looking at it purely from a technical perspective and you want to use the 200 SMA as your directional bias, then yeah, go long above it. But bear in mind, we're in the largest recession this world has ever experienced. And we've got World War III on the doorstep. The last thing I want to do is buy the stock market. So yeah, if an indicator tells me to take a long, like my breakout here, if it tells me to take a long, I'm ignoring it because the fundamentals say this thing's coming down. Yeah, look at that. One rocket lands in a country. Bang. Do you really want to long this thing? With NATO sitting around a desk today deciding whether or not they're going to blow Russia up. Not really the sort of thing you want to be longing, is it, today? Would I take longs if it breaks and closes above the high? No, I'm short. I'm short on this. I think, Robbie, you need to, I don't recognize your name, but you probably haven't watched the Bootcamp yet. I'm a position trader. So I trade positions long term, or I trade positions until they work, basically. So I'm short the DAX at the minute. I'm not taking longs. I'm short. My bias is short. The world is collapsing. You do not want to be buying stocks. That's just my opinion, obviously, but but if you wanted to, it depends again what time frame you're trading. Yeah, because yes, you can take a long. Yeah, if you got bullish engulfing there, take a long. Yeah, I don't know what time frame you're trading. This is the thing. It's everybody can make money in both directions every day. Yeah, stuff goes up and down. That's the thing you need to. Well, obviously, everybody pays attention to is it's what happens, isn't it? So if you went long from the open yesterday, you made money. If you went short from the open yesterday, you made money, didn't you? Doesn't matter, does it? It doesn't matter whether you press the buy or the sell button. It's totally irrelevant. What matters is what happens after you press the buy and the sell button and when you exit your position. So if you hit the sell button right now and this thing goes up like that, you can either take a loss or you can wait for it to come back down and take a profit. If you hit the short button when it breaks down there and it flies up to yesterday's high, you've got two options. You can either take a loss or you could wait and add a position in there and come down and take a profit on both of the positions. Sounds really simple, doesn't it? But, people made money long and short yesterday. So if you're trading intraday and you're scalping 5-minute candles, you can go long and short in the same day. If it breaks the highs here, go long. And when it gets up to there, go short. Make money on both of them. But personally, what I'm doing is I'm scalping short on this because my expectation is that this will be going down to here, below that low at some point. I don't know when, don't know how long it's going to take. Look at it. That happened in a week. That happened in a week and a half. Yeah. Why won't we be down here next week? Doesn't matter, does it? You take a position either way. But it's up to you on your strategy, your system. Morning cash flow. Can you explain how average daily range is different from daily average true range? They're the same thing. It's the same thing. ADR, yeah, stands for average daily range. Yeah. ATR stands for average true range. The difference between the two is this is only measuring daily range. This is measuring whatever time frame you're looking at. All this ADR indicator is measuring the average daily range. So when you flick down to M15, it's still showing you the average daily range. If you use an ATR indicator, it will show you the average true range of whatever time frame you're looking at. It's the same thing. ADR is ATR. It's just the daily version. That's it. But we measure. So the reason this indicator is useful is because price on a ATR obviously works on all time frames, and you are measuring the true range something moves over whatever period of time you're looking at. We know that in a single day, an instrument has an average movement. So, on average, this thing moves like that. When it gets bigger than that, like this, like yesterday was an ATR hit 125 yesterday, 175. 150. What was ATR yesterday? 322 on a 265. So yeah, roughly 125-ish. So when we know that when something gets extended 125% of its average daily range, it's exhausted. It's not often 23% of the time. It can go much further. So it tends to pull back from there. And that's why we use ADR. ATR, if you have something ranging over 15 minutes, for example, you can see my stops there, can't you? Look, there you go. That's where my stops were on the DAX. They're actually further than I thought. And actually, when we got up to there, I pushed them back because I was manually watching them. That's why. Anyway, ATR. So ATR, obviously, if you're monitoring ATR on a 15-minute chart and you get a news event, strong momentum, that can carry on. So your ATR will not really change a lot. It will go up a little bit as price accelerates in one direction or the other, but you'll get one big candle and then price action goes back to normal. So, ATR has a use on lower time frames, and I think personally the main use of ATR on lower time frames is to, if you're using a stop, is to use the ATR distance as a stop. So use a multiplier of ATR. If the ATR, if you're taking a short on M15 and the ATR is 25 pips, use 35 pips because the average candle won't take you out. So if you're scalping entry there and you want to make sure that you don't get taken out in one candle going the other way, you can use ATR as a stop multiplier, which is what a lot of people use it for. That's what ADR is. It's just a measurement of the daily range of a pair. Like I say in the bootcamp, there's two uses for it. If you're short and this thing gets to there, take your profit, because the probability is it's done its move for the day, because this is what it does on average. So if it gets down to here, likelihood is it's going to pull back. So you want to take a profit if you're short. If you're mean reverting and it gets down to here, likelihood is it's exhausted and it's done its move and you're going to get a pullback. So you can mean revert it from there. It's just like a Bollinger Band, really, except it's static. And obviously it's dynamic because your average daily range changes on a daily basis. But yeah, same thing. Bro, difference is that you're a position trader and I'm asking you scalping question with a tighter stop loss. Yeah, so I think I answered that, didn't I? So yeah, go. I mean, like, if you're trading candlestick patterns, there's a long entry there on a bearish engulfing, a bullish engulfing. There's a not short entry there on a bearish engulfing. Stop above the high, stop above the low. You're in both of those trades at the moment. One of them will work, one of them won't. Doesn't matter. If you're scalping, directional bias has nothing. If you're a scalper, get rid of all your moving averages and everything. It's just absolutely pointless. Price action is the only thing you can use when you're scalping. There is nothing else. Right now, you want to be doing nothing but hit the short button. Nothing but hit the short button. Last candle, you want to be doing nothing but hit the buy button. Yeah, this is why people who try to trade and try to scalp lose money all the time, because you're scalping a time frame that is just pure chop. You're going to get signal after signal going against you the opposite direction. The only thing you need to focus on as a scalper is risk reward, money management. Going short, when that breaks that low, add another position and get out quick. Yeah, you have no control over this. Do you think everybody yesterday, right? And this is the thing, yeah. What was everybody doing yesterday? What was yesterday? Bullish, 100% bullish. Above the 50, above the 20. Everybody was long. Everyone was like, oh, it's lovely. I've been scalping long this thing all morning. Smashed. All your money gone. Yeah. Price action is king. And it's the only thing on scalping. Moving averages are utterly useless. All they tell you is where price has been. Moving average crosses happen after the event. Moving average cross happened there. Price has already moved. It's happened. You've missed it. Sorry. If you're getting in with the moving average cross, you're just going too late. This is why 90% of people experience at some point in their life that thing where you go, why is it every time I hit the buy button, it goes the other way? Why? Because you're using something that told you something happened 25 minutes ago. Pointless. Moving averages, utterly useless. Unless you are using the ones that institutions focus on. Well, not institutions don't use moving averages, but unless you're using ones which tell you long-term trend and you're a long-term trader, anything short-term is just every indicator, every single indicator out there. My indicators included, all lag, apart from ADR. Everything lags. RSI tells you that the price has moved up. I know, I can see it. Price actions told me that. I don't need an RSI to tell me, you know, you show me an RSI chart with no candlesticks in it, I can show you the candlesticks. I can paint the candlesticks for you, and I'm pretty sure I get it pretty much right. Yeah, it went up and it came down. It went up, came down, went up, came down, went up, went up, came down, went up, came down, went up, came down, what? You know, it all does the same thing. All this does is tell me when there's been a lot of strength in one direction with no profit take. It's a signal, a condition in the market. But if you're scalping, you just need to get in and out fast. You know, you've got a 50-50 shot every time you hit the button. Yeah, this thing could either go down from here or it could go up from here. Nobody but the central banks can tell you anything. No one can tell you which way it's going. The central banks will decide which way it goes after you press the button. So the only thing you've got to worry about is risk. Direction is irrelevant. Yeah. No idea where this is going. Let's see. I'll try and get out down there. See what happens. Basically what I've just done is I put my foot on the accelerator. I've taken the steering wheel out and I throw it out the window. I can't steer this ship, this car, this train, whatever you want. Basically, I'm just a passenger. The only thing you have control over is risk. It's going to go up and down over the next hour, and I'm either going to make some money or I'm not. So, you know, whether this is above or below these lines has nothing to do with what's going to happen next at all. It's a new day. Scalping is the equivalent of being dropped into a tennis league with Federer, Nadal and Djokovic, and expecting to win a game after taking the course. Yeah, exactly. That's a really good analogy. I like that one. That is it. Or it's like being in The Walking Dead, walking into a camp and someone going, "Quick, we need a brain surgeon. Read this book. You've got an hour. We need this guy's head opened and need you to fix him." All right then. Yeah, when you open that bloke's head, you've got no idea what you're going to find in there, are you? How could you possibly know what you're going to do? What's going to happen next? It's just not. That's a really good one. Dropped in with Federer, Nadal, and Djokovic, expecting to win a couple of games. Yeah, I wouldn't be able to get the ball over the net. You were talking about ADR for mean reversion. Now, what if it doesn't reverse me back and keeps going down and a big sell-off? What do you then, like, if you keep adding positions, you'll be broke? Go and watch the Bootcamp, Robbie, all explained in there. Institutions don't trade on anything but fundamentals and support and resistance levels. I also heard scalping is like playing in the Champions League on with a Sunday League team. Yeah. Robbie, you can't. I wouldn't say stuff scalping. What you need to do is try everything. Yeah. You don't know. Timeframes are impossible to pick as a trader until you've tried them all. Yeah. So try trading M5, try trading M15, try trading hourly, try trading 4 hourly, and try trading daily. Set up 5 accounts if you want. Try all different time frames. After 3 months, look at your P&Ls and see which one's in the worst loss and which one's in the best loss. None of them will be in profit, but see which ones haven't made the worst. Focus on that. And I can guarantee you it'll be one of them. Hourly, 4 hourly, or daily. Because you're trading pure luck. Yesterday, I made 6%. Was there any skill involved whatsoever? No. Nothing. Market came down because of rocket hit. Yeah. I'm trading total chop. Right? Look at this move, how catastrophic that is if you're a scalper. If you're on the wrong side of this. Well, not catastrophic, you should have a stop loss in place, wouldn't you? But look at how much money I managed to make out of that. Yeah. Look at it on the daily chart. Can you even see a rocket hit in there? No. It's just nothing. It's nothing. It's a test of the high and it's a test of the low. It's just a normal daily candle. The lower down you go, the more crap you're trading, the more chop you're trading, the more algorithmic movement you're trading, the less chance you have of anything working at all. And this is what everybody wants to do is when they want to be a trader, they want to be a scalper, they want to be able to get in and out the market every day and make a load of money. It does not work that way. If it did, the banks would be doing that on a daily basis, and they have algorithms which just move the market around to do that for them, because no human being can do it. You can, I mean, you can make money scalping. There's a lot of people out there that do make money scalping, but you've got to have a certain mindset. So you've got to try it. But, you know, don't concentrate on indicators at all, really. There's no indicator that is... I've just to labour this point, I have a piece of software called Strategy Quant, which will generate random strategies at a rate of around about 2 to 3 million an hour, right? And it basically just takes indicators, combines them together, and we'll basically come up with combinations that work. And then you test them for robustness, and you forward test them, you test them out of some, you do all sorts of testing on them to see how good they are. I have never found anything in Strategy Quant ever that has the slightest robustness moving forward over a 10-year period that is not on the 4-hour daily chart. Nothing. And there's a good book by Larry Williams, if you want to go and read it. And it's called Long-Term Secrets to Short-Term Trading. It's one of the best books you'll read. Long-term, I can't even type secrets. To short-term trading. You'll find PDFs for this, all right? This book. Expensive, blimey. That's why there's so many PDFs about it. All right? And the title of this book says it all, doesn't it? Long-term secrets to short-term trading. What are you expecting to get out of this book by Larry, one of the most successful traders out there? You're expecting to get the long-term secrets to short-term trading. If you read this book, the long-term secret to short-term trading is not to do it, because it doesn't work. Yeah, he wrote a book enticing everybody into something that just doesn't work. And he says in there, you don't do it. You use daily charts. If you want to make money, use daily charts. Anyway, laboured that point. But, you know, you can have lucky trades. Yeah, I went short. Yeah. Look at that. Oh, I just missed my TP. Yeah. But what were my odds on that trade working? Yeah. Every time you hit the button on this time frame, the banks are either going to take it down or they're going to take it up. And it's going to take a while to get there. That's literally the only thing on your side is luck and the banks and momentum. So if you're going to scalp, use momentum. What is momentum? Candlesticks. So don't focus on any indicator. Your indicators that were telling you to go long, your moving averages, 100% wrong, weren't they? Forget it. Move stop to break even. I'm either going to get stopped out with no risk, or I'm going to have a winner. It's a coin flip. Anyway, but try it. Yeah, I make money scalping, but I make money scalping and I lose a lot of money scalping. I come out overall as a winner long term, but I'll have days where I'll lose three days on the trot. If you're not psychologically built to withstand 3 days of money loss and then not over leverage to get that back, scalping isn't for you. And that is 99% of the human population. Our brains are not wired to do this. Our brains are wired to understand fundamentals and long-term movement, and we can see it happening here. Yeah, you know, when you see a trend in play on a higher time frame, it becomes very easy to trade it. Yeah, you know, when this daily is red, I do nothing but take shorts. Yeah, sometimes it doesn't work. Sometimes it, you know, I'll take a short and it doesn't work. But what I do is I make sure that I don't let the market take my money. And that's what's explained in the bootcamp, the way to do that, which is the way the banks trade. Yeah, which is trade. They take positions. They don't They don't get in and out. They do. I mean, there are desks that do that, but they're not, like I say, they're the 1%ers. Not many of them out there. Morning, Amit. Good to see me back. Yes, I'm back. I'm alive. Probably the biggest issue I have is to hold profits for a longer time frame. When I'm in profits and market reverses back, I tend to book my profits ASAP and the market goes back. Yep, so there's a very easy solution to that one, Robbie. If you're entering a trade on a 15-minute time frame, I thought I was in a Euro Swiss, so yeah, I've just had a reversal on Euro Swiss. There you go. So what you do, you take that reversal alert on the 15-minute time frame. Okay. If you're using a stop, let's say, for example, you're going for yesterday's low. Yeah. So if you're going to use a stop loss, there's your target, there's your trade. Okay. So now flick out to the hourly, and you do not watch this on any time frame less than 1 hour or 4 hour, up to you, one or the other. But do never look at the 15-minute chart again, because you are now in a trade. That trade is either going to, if you're using risk reward, that trade is either going to play out or it's not. When it gets down to here, if you want to, you can move to break even. But the likelihood is it will come and stop you out and then move to your position. So I wouldn't recommend it. But if you get scared, and that's totally normal, if you get scared, if you're short, if you took a short position there on that break, yeah, and your target was down here, and it did that, you exit with that tiny little profit because you got scared. So the way to not get scared is to go onto higher time frames where you don't see the chop. You don't see all this crap. Look at that. Missed my TP. Probably going to stop me out of break even now. After it stopped me out of break even, I can guarantee it's going to come down here. That's what it does. Break even stops don't work. What you should be doing is leaving that in place, wherever it was up there, going for the gap fill and adding another position there, so that when it comes down to here, you've got twice as much profit, and then get out. Anyway, that's scalping. It's different thing. Once you get over the fear of giving back profit as a swing trader, you're on course. Yeah. It's a problem everybody has, and it's a problem covered in the bootcamp. For some reason, Larry Williams is bullish and doesn't believe we'll hit the recession this quarter. Is he? I've not actually seen what Larry said about this situation. Yeah, I mean, there is the argument at the moment for the Santa rally, which we get, but I disproved that, didn't I? Oh God! Somewhere in the Telegram group, there's a post. We typically get a Santa rally in December, which is here. Yeah, so we get Santa rally. But when we're in a bear market, we quite often get a Santa decline, which is what we're in at the moment. So yes, there's an argument for a Santa rally. It's a 50-50. We're either going to get a Santa rally or we're not. But we've had much worse earnings than normal over the last earnings quarter here, where we didn't get that big rally. We got a bit of a pullback, but we didn't get a rally. So everything is suppressed and depressed at the minute. For those 200 moving average traders, everybody's jumping in short now. You know, it's just, I'm not sure we're going to get the Santa rally, but that might be why Larry's bullish. He works very much on statistics, and he works on higher time frame charts. So, yeah, I mean, he'll be in a smash bar trade from here, long, on the weekly. You know, when you look at it on the weekly, market structure is very obvious, isn't it? And we are pushing up. So somewhere around here, we are going to get next leg down. If market structure is going to hold, yep, this is where we're going to start to turn. So I'd be surprised if he is bullish, but I don't know. He's a totally different trader to everybody. I mean, he's just different, does everything different, which is why he makes money. But it kind of feels like you do over leverage to get it back. You get in very aggressively to make up for losses. Yeah. Yeah, I mean that's part of the aggressive drawdown control is part of the job, and so you get in aggressive. But you know, everybody, and this is the thing: there's no way of teaching that, is there? Unless you're experiencing. Look at that Euro Swiss trade I got into aggressive on was it last month or the month before? Euro Swiss. Yeah, this one. Look, I started getting in aggressive. I think it was about here, wasn't it? Do you remember? And I just got killed. I lost, I don't know how many percent lots on this, didn't I? On these aggressive positions. I got into aggressive. And it's this step here. Can't see that probably. It says walking on water. You get to a point where, and all traders do, me included, you get to this point where you get too aggressive with your positions and you get too confident and you get kicked in the arse. And that's where you have to take a step back. That's the point that kills everybody, walking on water. And it's the same when you get a new indicator. You know, I have people constantly saying in the Telegram group to me and in DMs, this is the best thing since sliced bread, the market reverse alerts indicator. I've had 5 trades, 5 wins. I found it. It's amazing. Like, hang on a minute. You're having a lucky run. Everyone can flip a coin and call heads 5 times, but eventually that tail's going to come up. And what happens when that tail comes up and you're double leveraged because every trade's worked so far? That's walking on water, overconfidence. You get it and it hits you and it hurts. And the way I overcome that is I get aggressive and I get hurt, like with this one, and I suddenly go, actually, yeah, I need to stop this. And you go, yeah, I nearly blew that. When you trade multiple pairs, do you avoid opening correlated positions? Yeah, so I have a dashboard I created which tells me what my exposure is. I don't worry about correlated pairs. I worry about exposure. So I always try and keep my exposure to no more than 2 on an individual currency. Again, this is all explained in the bootcamp. Very, very important exposure. If you're trading positions or swinging and you've got 4 longs on the US dollar, and the US dollar collapses, you're collapsing on 4 positions. It's twice the drawdown. I just want to share something that I was told in Network Coffee Shop, never heard of that, from a prop trader 7 years ago. He said that the taking statistical advantage and probability is the game if the volume is there. Well, yeah, it depends how he was trading. That's his strategy. That's great. Everybody's got a different strategy. It doesn't matter. You know, my strategy so far this month has produced me 21% return. I'm not going to get into conversations about strategy. There's a million strategies that work. The problem is the trader can't execute those strategies. If I give 10 people a strategy, I'll get 10 different results. That's the fact. I've said it many times and I'll say it every day until it sinks in everybody's head. When you take a trade, that's going to happen. It's going to go up, it's going to go down, it's going to move through time. Those are the only 3 constants in trading. Up, down, sideways. Which of them is going to happen and how long it's going to take, you have no control over and no way of forecasting at all. When I hit the button, as I did on that DAX a minute ago, yeah, I have absolutely zero idea whether it's going to go up or down from there. No one in this entire world does. So stop trying to control it, because you can't. Get in and then manage what happens after, and manage your risk. That's all you can do. My way of managing risk is to take multiple small positions without a stop loss, so that my trades get a chance to breathe and move with market structure, which is why I call myself the market structure trader, because as long as this thing keeps going like that, I will make money. If this thing goes like that, I won't. If things go like that, I won't. But these things don't happen in the market, do they? Yeah. As long as it's got structure, it does this, I'll make money. And that's the way all traders look at it. You can't make money in a flat market. You can only make money when it's moving, which is why I've sat on the DAX for 4 days, 3 days, sideways, because it hasn't moved. Look at the DAX. Yeah, since I got into that trade there, hasn't gone anywhere. Didn't go anywhere, just went sideways. If you're trading M5, yeah, make a lot of money, but I'm not. Yeah. This is time. When I got into that trade, it was either going to do that or that. I have no idea. My being is telling me it's got to come down and fill this propulsion gap. My being is telling me we're in a bear market and we're on a pullback. There's so much telling me this is going short, which is why I'm short. But when I hit the button there, I don't know when that is going to happen. This timing, and again, the bootcamp is all focused on this. Timing is the thing that you cannot get right. There is no indicator under the sun that times the market. You can't do it because you're not in control of it at all. Think about flipping a coin. Every time you flip a coin, how long does the coin take from the flip to land in your hand? It's different every single time. Why? Because you can't control exactly the flick of your thumb. So it's going to move a different height every time. Yeah. Yes, we might think the same thing is going to happen over and over again. We see that move. We see a 71.8 pullback. We go, yeah, Fibonacci patterns play out a lot. They also fail a lot. So when you take that, you've no idea which way it's going to go. But what you do know is in the future, it's going to do that, because if they have to buy, they have to sell to get out. If they sell, they have to buy to get out. So as long as there's buyers and sellers in the market and the market exists, it's going to go up and down. If it goes up and down, we make money. Why get in, put a stop loss, so that when it does that and then that, you get your money taken away from you, but it actually hits your target? It's pointless. Think about it. Why on earth would you place an order and say, here you go, here's some of my money? Get rid of that. And if it does that, so what? Add another one and wait for it to do that, because it always does that. That's what it does. If it didn't, we couldn't make money. No one could. And forget the banks are the ones that are making the money. They're the ones moving it up and down. A load of people exited stocks. The banks executed that. They didn't have a choice. So you just do what the banks do. Just about to hit target on that, hopefully. Holding my beer, do you want to? I haven't had that for a while. It was always good fun when you're a kid in a pub and someone says, hold my beer. It's a fight starting. But you did say taking a trade is like a deal, if you can be sure. If you can be sure, then only you trade. No one can be sure. That's the wrong thing to say. There's high probability trades. Nothing can be sure. I'm negative on scalping, but you do think people can make money. I make money scalping. I run multiple prop firm accounts and I make money scalping. But I blow those accounts as well because I can't control. Again, this is all, everybody else in here is bored to death because they've heard this before, but you can't control how many trades you get winning and losing. So if I take 10 trades, right, I can't tell whether I'm going to have a losing run of that many before I get a couple of good winners, or I'm going to get a couple of losers and then loads of winners. I can't control what my strike rate is and how that strike rate unfolds. The only thing I can control is my risk, right? So when I'm scalping on my prop accounts and I take a short with 1%, right? If I get 5 trades go against me, I lose 5% of my account. I can't tell when that's going to happen because I have no idea when the market's going to move against me. Yeah. So if I take a short up here today and it's the only trade I take and it stops me out, I can't control that. If I take 5 shorts at the highs over the next 5 days and they all fail, I blow my prop account. The next one I take will make me 12%. If only it had happened on trade 4 instead of trade 5, I wouldn't have blown that account. That's why prop firms have loss limits, because they know that the best trader in the world is going to hit that loss limit. Because there isn't a trader out there that doesn't hit that loss limit. Because there isn't a trader out there that doesn't have a losing streak. So that's what they do. Morning, Neo. Question. I will do some analysis in a minute. I'm sorry, there's lots of questions coming in, which is good. I like questions. Question. You short and have multiple positions. What if it reverses and keeps going up all time to an all-time high? Then I would do aggressive drawdown control and get out of those positions. Yeah, look at this. What's all this? Loss. It's all loss. Using profits to get rid of losses. Again, it's all covered in the bootcamp. It's called drawdown control. You can make money scalping. Making a living scalping is a different conversation entirely. Exactly. I can't make a living. I can't. Well, I don't know. I put it this way. I probably wouldn't want to make a living scalping because it is high burn rate, highly stressful, and hard. The reason I'm asking is because I tried it many times and failed because sometimes the market keeps going the other way for months. Again, it's all explained in the bootcamp. You get out. So one of two things. I'll just quickly cover it. So let's say, for example, you had a long bias and you got in long here, there, right? So if you got in long there, it didn't move up high enough to take profit and it came back down again, you had another position. Didn't come up high enough for you to get out, it came down, you had another position. That could be your exit there. All 3, thank you very much, happy days. So that's a trade that works. That's a position trade that works, right? Let's say, for example, you get in here, it doesn't work, you get in here, you get in here, you get in here, you get in here. At some point during this process, your drawdown will hit a level where you will go, I'm wrong on this. I'm really wrong on this. I need to do something about it, right? So what you will do is you will use some of the profits that you have gained this month, and you will start to close out a portion of those positions, or all of some of them. So I will, let's say, for example, this was sitting at 4.5%, and I was uncomfortable, and I had 20% in the bank. What can I do now? I can use 2% of my profits and reduce that down to 2.5. That makes me more comfortable. The rate of drawdown is going to drop because my lots are smaller. I'm in a more comfortable position. My overall drawdown is more comfortable. Yeah, so that's one thing you can do. The other thing you can do is aggressive drawdown control positions, which is what I did yesterday for the last week on the DAX because I didn't get them stopped out, but which is to take larger position sizing, because after something has moved such a long way against you, the odds of it coming down are much greater. Yeah, because everybody that started taking a long position here, to get out of their long position, they have to become a seller, because they have to, when you buy, when you exit a position, you hit the sell button. So the further it gets extended, the more that elastic band gets stretched, the more probability and the faster the ping back of the elastic band is. So you can start to get in more aggressively the further it moves against you. And those aggressive positions, because they're bigger sizes, will pull your average up faster towards price. Therefore, you only need one quick move down to exit the entire lot with either a break even or a profit. Aggressive positions. You can then use that profit to start to scale out of some of the ones which have gone really wrong. And it depends on how much you make there as to how much you can scale out. And you could use 50% of it, 75% of your profit. You could use all your profit. Up to you. There is no rule in place. It's a feeling of uncomfortableness. I'm not uncomfortable in 5% because I've been in it. I live in it. I live in drawdown. I'm always in 2 to 10% of drawdown, always. Because the whole purpose of me having a trading account is to put risk on. So my account is risk. You've got to start looking at risk in a different perspective. Yeah. If you've got a 10K trading account, you've got £10,000 to risk. If you are in 5% of drawdown, so what? Just means that the trade is working. It's just in the process of moving, which is what the market does. You go short somewhere, it's not going to go boom. Thank you very much, is it? It's going to go like that. It's going to go like that. Then it's going to decide to do that. Then you'll get out. But you've got to sit through that. It's called drawdown. This is what your account is for. It's your risk. It's your drawdown. So if you're not in this, if I don't have this, I've said it many times before in the live room. I come on and I go, I've only got 2 positions on. I need to get some risk on because I haven't got any risk on. If I haven't got any risk on, I can't make any money, can I? So if this is sitting at 0.2% with 2 positions on, I'm going to find it very hard to make a living, aren't I? Again, it's all covered in the bootcamp. Right. How do you set profit targets and how do you use ADR? My profit target is what I want, what I need. So, for example, I mean, I don't have a profit target. I get out when I'm happy with my trade. Right, so this short that I took, yeah, I've added to it. So that trade I took to demonstrate the point there, and I've added another one on a break of that low there. I will get out of this when I'm happy. Target at the moment is down here because I'm expecting a gap fill. So it's a logical area. That's a logical area to target. That's a logical area to target. That's a logical area to target. So yeah, I mean, I don't know. How I use ADR is basically, like I said earlier, if I'm in a short position and we hit ADR, I'll take some profit because the likelihood is we're going to bounce from ADR because this, these are the probabilities of it moving beyond these levels of its average daily range. So if we get to 150 ADR and I'm still in a short, I'm going to take it because the chances are there's an 88% chance this thing's going to bounce. That's how I use ADR. And with my positions, as you can see on the DAX, my goal is always to keep my average. So these positions that I've got on, those 3 positions, the average break even is there. I'm always trying to keep average within an ADR. Why? Because we know that price moves on average, an average ADR. That's what it is. It's the average daily range. So if I can keep my average price within that range, I know that if it moves on a normal day, there's a high probability I'm going to get to a position where I can get out. Look at my Euro US dollar. Yeah, ADR. We just had ADR hit on Euro Yen. That's the average daily range of that pair. Yeah. So my average at the moment on these 2 positions is here. So today at some point it's highly likely I'm going to get into profit on it. That's the main use for ADR for me, is first of all for finding opportunities to enter, because if it's extended to the upside and we're in a downtrend, that's a good opportunity to get in short. The second is for keeping my break even within that range so that I know that I can get out of my position when I need to. And also for taking profit. When it gets down to those levels, we want to take profit, don't we? Because there's a probability, high probability, it's either going to hit it and bounce, or it's going to hit it and accumulate for a new move to the downside. Either way, we want to be out if we're in a short, because it's likely to either stall or reverse. That's what ADR is for. Just measures what you know, when you're looking at something, let's say an equity on average moves 1.5% a day. As a trader, do you think targeting a 3% risk, 3% reward on every trade you take is a good idea? If something only ever moves 1.5% a day and you want to get out in a day, should you target 1.5% or 3%? It's obvious, isn't it? This is what ADR is for. Yeah. Don't set sky high. If you're trading intraday, don't set sky high targets of 200% of its normal average daily range, because it's not going to get there, is it? And the likelihood is if you go long, you're going to go, oh, break even. And then it's going to come back down and take your stop out. And then it's going to move up there the next day, because it will move ADR today, then it will move an ADR the next day, then an ADR the next day. So you can move 3 ADR in 3 days, but chances of you doing it in 1 day are not going to happen. So it just gives you a reality check. Yeah. You know, look at oil. I'm expecting oil to get up to $100 a barrel, right? So I'm looking for it to get up to somewhere around there, okay? When am I expecting it to get there? Well, that's 1 ADR, that's 2 ADR, that's 3 ADR, that's probably 3.5 ADR. So if this thing does nothing but go bull candle, bull candle, bull candle for 3 days solid at its average daily range, yes, it could get there in 3 days. But how many times can you count on one hand it's done that? It just it doesn't do it. Look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 days, right? We've moved that far, which is a total of 120 pips on a 35. Yeah, so in 21 days, it's moved 3 ADR from low to high, and now we're sitting back in the middle again. Yeah, so when's it going to get up there? Based on current price movement, probably in around about 2 months. But it's only 3 ADR away, isn't it? Because price can only move a certain distance, because the market only has a certain amount of money it can execute a day. This is not the banks haven't got an endless pot of cash. If they need to move oil up, or they want to try and manipulate oil up, they've only got a certain number of millions of dollars worth of oil that they can buy before they go, well, we can't buy any more oil. We haven't got enough money to do that. It's not good risk management to do that. So the price will only move a certain amount of movement, because even if all the banks decide to do the same thing at the same time, yeah, they're all going to do the other thing at the same time. Everybody that got in long got out with a profit. When they get out, it causes a selling frenzy, because these buyers become sellers. Yeah, at the moment, they're just buying and selling and buying and selling and buying and selling. But ADR shows you what, on average, is going to happen today. So if I'm going to take a long position today, target is there. If I'm lucky, I might get up there. If I was targeting something up here, I'd be looking at this going, right, well, I don't think we're going to get there today. Why? Because it's an 88% chance it's not going to get past that level. So that's what ADR's. I mean, how you use ADR is entirely up to you. That is a way to use ADR. There's lots of ways to use ADR. So here you go. So this trade here that I've just taken this morning, which is tiny, the average is there. So what I can do now is put that one there and the stop there on these 2 positions, which is roughly the average between the 2. So if price now comes up to here, I lose absolutely nothing. If price comes down and fills that gap, happy days. But the odds of this trade working when I hit the button there were exactly 50%, because I have no clue when I hit that button, as you saw, what was going to happen to price. I haven't got a clue. Didn't have a clue then, haven't got a clue now. I have no idea where this is going. It's either coming back up here somewhere or it's going to go down there somewhere. And it's going to take a while to do it. I have no clue. But what I can do is I can manage my risk. The only thing I have in my control is risk. Yeah, forget your indicators. Forget everything. I sell indicators. I'm telling you to forget them. If you're going to scalp, if you're going to do longer term, yes, you need stuff to do technical analysis, you need indicators. But use indicators that make logical sense, like ADR. Market structure. Market structure exists on every time frame in every instrument. People say to me all the time, does it work on crypto? Does it move up and down? Yes. Yeah, of course it does then. If it moves up and down, it's got a structure to it. If there's market structure, this indicator works. If stuff moves up and down, average daily range works. Apart from that, very little, and price action, there's very little you need to know. That's it. If you've got those things, you can make money, because you just need to know how it moves to be able to make money out of it. Like a snake, slithers up and down. As long as it's slithering and you've got an idea where it's going to slither to next, you've got a chance of predicting a future movement at some point, haven't you? You just don't know when. Anywho. Now I know what I was doing wrong. That's good, I've solved your problem. I was adding aggressively, but sometimes I have lots of minus 2,000 and I reduced it to minus 300, but I want cutting it and became minus 4,000. Yeah. But prop account gives you a maximum percentage you can hit per day. So how do you manage the prop firm? So with prop firms, I take multiple evaluations. So give you an example. Let's say an evaluation cost me $300. I take 10 evaluations, costs me $3,000. Out of those 10 evaluations, I'll pass maybe 3, let's say. I don't know, it varies, but I pass 3 of them. So what I then do is I scalp those 3 accounts with 1% risk, 2% risk, whatever I need to. And as soon as I get one across the line to 3K, I stop trading it, because now that has paid me. So I now have 2 evaluations left. Whatever money I make out of those 2 evaluations is what I make for that month. Yeah, so let's say I make 4,000 on one and I make 5,000 on the other. That month I would take home $9,000. I won't actually, I'll take 80% of it, or 90%, depending which firm I'm with. Yeah. But next month, I will blow 2 of those accounts, trying to get up to my level again. And one of those accounts I will make $2,500 out of, or something. And when I get up to there, I will go, right, I'm going to stop trading that and I'll withdraw it in 2 weeks when it lets me do a withdrawal next. It's a business. Trading prop firms is a business. It's not what everybody thinks prop firms are. Is I'm going to get a 100K account to trade, and I'm going to keep that account, and I'm going to keep withdrawing from that account month after month after month. In reality, what's going to happen is you're going to try 5, 6, 7, 8 times to get that 100K account. By the time you get that account, it means you've had a lucky run. Happy days. And as soon as you get that account, your luck's going to change and you're going to blow it. And then you're back to square one. And what you've ended up doing is just spending 8 or 9 evaluations, got funded, got angry, and then gone back to square one. That's what happens in prop. What everybody wants is to get that 100K account, hold it for 6 months, and withdraw from it every month. Yeah. The prop firms know that that's not going to happen, because you're going to have a losing run. And when you take that account down to 95K, staying within your limits, yeah, your focus now is to get back that 5K. What does that make you do? Overtrade, over leverage. What does over leveraging do? Kill your account. square one, start again. That's the reality of prop trading. So the way to make money out of prop trading is to play them at their own game, knowing the odds, knowing that I'm going to blow prop accounts regularly, and just using evaluations as a cost of doing business. I spend 10,000 a month. I make 20,000 a month. I lose 16 evaluations. I gain 5 accounts. Those 5 accounts make me X. It's a business. It's all total luck, yeah? If this was a 1% trade this morning and it had gone up, I lose 1%. If it was a 1% trade and it goes down, I make whatever I'm going to make. I might make nothing because this might come back and break even me, and I make nothing today. Yeah, that's the reality of prop. I can't position trade prop because I can't control this. I'm not in control of that. I was up to 15% drawdown this week. Yeah, I can't control that. It's not in my control. If a rocket hits Poland and I'm long, I'm going to go into more drawdown. I can't control any of it, can I? So you can't position trade prop firms. It's very, 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 very difficult. They get you by these 30-day limits, yeah? So you've got 30 days to pass your evaluation. So you could say, right, well, I will position trade it. What I'll do is just reduce my positions so far down that it's really hard for me to hit that 5% max loss limit. The problem is you'll be trading such small size that you'll find it very hard to hit a $10,000 profit target in 30 days. Yeah. They're not stupid. They're a business. Their business model is making money out of evaluations. Does it make sense to target profit target the previous day's ADR? The previous day's ADR has got nothing to do with anything. Previous day's ADR is just what happened yesterday. What happened yesterday has got no bearing on today. Yeah, this thing moved. Oil moved 47 pips yesterday. Its average daily range is 35. So it did a 125, 150 ADR move yesterday. That's got nothing to do with today. What is relevant today is yesterday's high and yesterday's low. Yeah. So if I'm going long today, for example, and you'll see me do this all the time. Yeah, I took that profit there. Why? Because we were coming up to a resistance. So I wanted to get out. We came into a propulsion gap where I was expecting the sellers to step in because that's where they stepped in last time. That's why I took my profit there. No other reason. And the fact, actually, that was probably an ADR as well. 37, yeah. So I took profit at 34. I took profit at ADR. Again, ADR. That's why I use it. But yesterday, if it hit ADR yesterday, I don't care what happened yesterday. It's got nothing to do with what today's average daily range will be. Today's average movement will be what's happening today. What news events are driving the market today? Nothing to do with what news events were happening yesterday. But where it got to yesterday is important because the banks and institutions will have limit orders set to trigger at those levels. And when it hits those levels, those limit orders will fire. Here, good example. Yeah. So we pushed up here. Let's use this as an example, right? Yeah, that low there on Thursday last week. Price moved down, hit that low, bounced off. Why? Well, because it's a double bottom. No, it's not a double bottom because there are tens of thousands of dollars worth of limit orders sitting here from banks ready to trigger when it gets to that level because they took the market long. They want that market to go long. So they add position size here, which pushes the market long. You see, the technicals have nothing to do with it. When you look at technical analysis, why does this move down? And why does Fibonacci 50% retracement work? It doesn't. What actually works is propulsion moves caused by sellers triggering additional selling. Just so happens to be at a 50% retracement. Or, but, and this is why Fib, I use Fib. I've got Fib on here now. Look. But fib doesn't play out because it's fib. Fib doesn't play out because it's hit the 71.9. Fib plays out because everybody that caused this buying frenzy wants the market to go up and is adding more position size. It's nothing to do with a number. Do you think anybody in any institution is putting a Fibonacci on their chart and going, oh, look, it's shit to 50%, we need to buy it from here? No, of course they're not. They don't even use candlestick patterns. Nothing to do with anything. All about order flow, all about market structure. God, you're making me talk today. I've got a sore throat as well. I don't mind. Yeah, I've come to learn when I use the market reversal EA, I have to filter the 4-hour breakers with a certain setup with a swing failure pattern. Yeah, use whatever you want. It's not the way you get into, like I just proved the facts here, haven't I? Why you get into a trade is irrelevant. Yeah, whether you've got an arrow on an indicator that pings a short, or whether a moving average crosses over another one, or an RSI gets above a level, why you press that button has nothing to do with anything that is going to happen next. Because this got extended on RSI, did it drop immediately? No, it went sideways for a day. Just because that got extended means nothing. It just tells me that we've had a lot of buying. What normally happens after a lot of buying is a lot of selling. So that's just telling me there's been a lot of buying. That's told me there's been a lot of selling. What's happened? Oh my God, it's gone up. Why? Because everybody that sold had to get out and make a profit. Market structure's playing out. All this is doing is it's alerting me to a condition that I know market structure reverse will start at. What happens when I hit the button? I have no idea. If Russia invade Poland, do you think this is going to have any bearing whatsoever on what's happening next? Nothing. Doesn't matter. Totally irrelevant. Am I going to get stopped out on this at break even? I have no clue. Doesn't matter. It's irrelevant. So how you take your trades and whether you decide to use the market reverse alerts EA as I do, and use some other filter on top of that to stick the EA on the chart, fine, that's brilliant. That's exactly what you should be doing. Playing out your strategy to your rules when you want to get in. That's the job. Hitting the button. The job is hitting the button. When you go and work for a prop firm, an actual London, a prop firm in a bank, they give you nothing but a ladder. You get a price ladder. You don't get a chart. You never see a chart. You see a price ladder. And you sit in front of this price ladder, watching this thing flicking up and down. Yeah, you sit in front of that for 3 months. And after that 3 months, they say, right, you ready to take some trades? You're like, yeah, that's why I came to this job. I'm like, right, okay, let's give you 10 grand and let's see if you can make money. Because you've been watching this thing go up and down. What have you noticed? Oh, it goes up and down. Good. What do you want to do up here? Sell it. What do you want to do down there? Buy it. All right, brilliant. Where'd you put your stop? Under there. Great. They don't give you any indicators. They give you a ladder with price moving up and down it and tell you to watch price moving up and down. What's your conclusion after 3 months? It's like the Karate Kid. Wax on, wax off. Why are you telling me to do this? Because now you can block. Oh. Sitting in a bank watching a ladder go up and down for 3 months. Why are you telling me to do this? What do you know? Well, it just goes up and down. Well, hey, good one. You're a trader. Market goes up and down. What do you need to do? Well, get in and get out when it's higher? Yeah. Well done. What did I do there? Got in. Get out when it's lower. Any idea where it's going next? No. It's so obvious, isn't it? When you hear me say it. And this is why I do what I do in the way that I do it, because I've got as much chance of forecasting the future as you have. None. You're saying do the evaluation near big capitulation swings to reach the large profit target. Yeah, what I do with my prop firm accounts, I scalp them on days. I tend to get in fairly big, so I always take a 1% risk, and I always add a 1% risk. So this trade, for example, here that I took, if it was on prop, I'd have taken a 1% risk there. To be fair on this one, I would have done that, give it a little bit more room. And then I'd added a 1% on the break. And now I would be sitting in something like 1.5 to 2% profit. Yeah. On a 10K account, if I can land a 2% profit trade twice in a row, I'll stop. Because what have I just made? 4 grand. Done. That account doesn't get traded anymore. It sits there for 2 weeks waiting for the withdrawal process. Yeah. So that's how the best way I find to trade prop. The best days to trade prop are when you know you've got volatility. Yeah. So get into a short position if you can with a wide stop, scale in maybe a couple of times, and make sure you're in a position when there's a news event coming out. You're either going to lose X% of your account. You can control this by removing your stop losses on the positions. You can get out with 1.5, 2% loss, or you can make 6%, 7% on the news spike. Get out, don't touch this account for 2 weeks, withdraw that money, start again. That's how you play prop. That's the only way I know to play prop, because you can't hold it. You can't. If you think about it, everybody gets in with 0.5% or 1% of risk. You got 5% daily drawdown, and you got 10% max drawdown. Right? If you're getting in with 1% risk, you can lose 10 trades in a row. Like, you can lose 5 trades in a row a day, 10 trades in a row overall. If you have 2 days, right? Let's look at the DAX, the last 2 days. This is absolutely spot on, perfect example. You're trading the DAX for the last 2 days. What have we had? Sideways. Yeah, total chop, right? If you're trading, if you're not scalping by the candle out, in, out, in, out, if you're trying to take any kind of trade here, right? You took a breakout long, didn't work, got stopped out. You took a breakout short, didn't work, got stopped out. 2% of your account gone, right? You see this massive push to the upside, you take another breakout, it goes up, you make 2% back. What have you done today? Earned nothing. That annoys you. So what do you want to do? Oh, I've got to get in again. If this pulls back, it's definitely going to go long, isn't it? So you get in there, comes back down, stops you out. Now you're minus 1% on the day. Why? Because the market chopped. Choppy days like this, I very rarely make money. Days like this, I make a fortune. Have I got any control over that? No, it's total luck. I happen to be in the right trade at the right time, in the right direction, and I keep my TPs very, very, very far away in case this sort of stuff happens. The days you make money in prop are the trend days. These days. Yeah. Get in on the break, it pulls back, you get in, add, pulls back, you accumulate, you get in, add, you get in, add. This is an 8% day, or 6%, or 5%, or 4%. It's whatever I need it to be to go, that's the mortgage paid, done. That's the car payment, done. That's the holiday, done. Yeah. So trend days, if you're scalping, this, and I'm just talking about scalping here, that's where you make your money. Everybody makes money on trend days. Most people, me included, a lot of the time lose money on rotation. How many times have you seen me in here when I've been scalping? You know, and I've, in the morning, I've made a 3% loss. And then I've posted my P&L in the afternoon with a 4% profit. Because we went into rotation in the morning and then New York trended. It's the days where you get, or you get a move like that, you just can't get on board it. New York open, you can't get on board. You just miss it. You might get a lucky mean reversion. You know, there's no, that's what I mean. I keep saying this thing, you've got no control. So you have to just be lucky. You have to manage your risk and hope that you get a decent movement on the day that you're trading it. And that's why prop doesn't last. There you go. I'll take that off now. So we're 1.5 hours into the session. Opening range. It's quite often 1.5 hours is, if we're in rotation, this is normally where we will stop and start to muck about. This is the doldrums. So let's lock some profit in. Yeah. So we've got a big propulsion gap here. So we're either going to move down and then come back, retest and drop. We're going to go into a trend day, or we're going to rotate. I don't know. Yeah. So I'm going to hit TP. So risk was there, wasn't it? So 28. So I made 76 pips on that with a 28 risk. Second position was about a 28 risk and a 44. So I made 100 and, I don't know, 120 pips off of 28 pip risk. That's a massive risk reward. That could well be done for the month or done for the fortnight, because you get paid fortnightly in prop. So that's done for the fortnight on one trade. Shut that down. Go and do another evaluation. Spend another $300. You just made $2,000, right? Go and spend another $300 or $600 or $900 on 3 new evaluations. You've got 15% of drawdown you can take there, because you can trade one up to 5%, go, I better stop that one, I'll try that one again tomorrow, move on to the next. Yeah, if you want to trade prop, that's the way I've found to do it anyway. Anywho, I believe WD Gann used breakouts of the previous day's open and close. He also used some mythical coordinates for his stop and profit. Turtle trading, yeah. So Gann, important thing again, all these people you hear about, all the turtles, everybody, Larry Williams, everybody you hear about. Read their books, study their material, look at their charts, notice the time frame on their charts. Yeah. All these people with all these amazing theories revolve around daily cycles. What do we do? Try and trade Gann on 15-minute charts. Why does it fail? Because it's chop, it's noise. It doesn't work. Sometimes it does, sometimes it doesn't. Breakouts fail all the time because we go into accumulations. That broke out, failed. That broke out, failed. We've got 2 failed breakouts on this chart in one day. Yeah. You know, it doesn't matter, does it? What stops you making money is the stop. I go short, I put a stop. It stops me out. Why did you lose money? Because the market went up and back down again? No, you lost money because you put an order in the market telling the market to take your money out of your account. That's why you lost money. You were right. You went short, put your stop there. The market came down to where you thought it would, in your favor, where you could have made a money. Why did you lose money? Because you put a stop. We know the market goes up and down, so why put something in there that's going to take the money out of your account before it gets to where you want it to go? Pointless. Anyway, I'll label that point all my life, and everyone can disagree with me as much as they like. That kind of proves the point. But anyway, you're talking about the DOM depth of market ladder. Yeah. So in prop and in banking, you watch the DOM. The DOM shows you what happens. The DOM shows you this. You know, this here. That's the depth of market for that session. Let's do it there. That's the depth of market for the London session. That's the depth of market for the New York session. That's the depth of market for the London session. On the depth of market, you'll see it do that. What do you know? From when we opened, we went up, we went down, we came back, we went up. Did the depth of market give you any indication of where that was going to go? No. Andy, you need a stop for a prop firm, though. Yeah, you do. Yeah, that's what I'm saying. You can't position trade. You can't position trade in prop. You need your own capital. Some people have tried it. I've tried it. I got to, what did I get to? 8%, I think it was. I did a prop evaluation, position trading it, and I think I was 3 weeks in, 2 weeks in, 3 weeks in, something. And I was up, and then drawdown got taken out by drawdown. All the trades worked in the end, but the drawdown killed me. That's why they set it that way, because it stops you trading profitably. Unless you're scalping, like I say, and this is why I say you got to scalp. You can swing prop. I mean, obviously you can swing prop as well. You know, trade higher time frames. But all this is, what you know, people call it different things, and you know, people call H1 swing trading, or H4 swing trading, or daily swing trading. People call M5 scalping, M1 scalping, M15 some people call scalping. What's the difference between price action on all of those time frames? Nothing. Yeah, there's a trend to the upside on the hourly chart. There's a trend to the upside on the M5 chart. There's another one. Yeah. What's the difference between that and that? Like trends? So why are you a swing trader on the hourly chart? Why not swing trade M5? Why not scalp hourly? Take a scalp on the hourly chart and get out down here. You can trade any time frame. So you know, if you don't like M5, you'll have more success on H4 and H1. But your signals, you've had one H4 reversal alert signal there on the DAX since here. On the M5 chart, you'll have, I don't know, you'll have had 20 or 30, 40. I don't know how many reversal alerts you've had, but you've had lots. The same thing. It's just market moving up and down in structure. It's just there's more chop on the lower time frame. So swing trade on hourly. You just got to make sure you hit the target within 30 days. That's the trouble. But you do that. If you think about it, you've only got to have 5 trades that work. If you risk 1% a trade with a 2-to-1 risk reward, yeah, you've only got to have 5 trades in a row and you've hit. Everyone can have a lucky streak of 5, can't they? It's just it's just timing that lucky streak. That's the difficulty. You don't know when it's going to happen. So that's why you do multiple evaluations. You take 5 trades in the morning, they work. You take 5 trades in the afternoon and they fail. You'll have passed the morning evaluation and failed the afternoon evaluation. You're taking the same strategy, executing it in a different time period. One of them will make you 5 grand, one of them will lose you an evaluation. You can't control when it's going to happen. So you need to trade all the time. If you've got to trade all the time, you're going to need multiple accounts to do it. That's the way I see prop. That's how I think it should be used. We were right at the 8% threshold. Oh, yeah, that's right. Yeah, Diamond remembers. I believe it was oil that took us out on the finish line. Yeah. I think it was, wasn't it? I was so close, wasn't I? But I was so close because I had a lucky run. You know, we had literally stuff just went straight into profit, and very little went into drawdown. Like we went like maximum 2, maybe 3 positions, and then it all started to play out, and it was brilliant. And then we just had one position which just went, and that was it. Evaluation over. And then it went up, and it would have made us pass, but we just hit that 5% rule. Just one of those things, isn't it? Any thoughts on FTX collapse? I don't know. Don't know anything about crypto. Don't trade it. I don't think crypto's long for this world. Honestly, it's just everybody's. I don't know. It's just another thing, isn't it, to trade? But there's no. The reason I don't trade it is because there's no fundamentals behind it. There's nothing that causes this to move apart from the indices. Now the indices tracks the indices. So if this is coming down, you know, it's just doing what the indices are doing. but there's no fundamentals behind this. So is it a certainty that institutions use ADR and highs and lows? No, they don't. Institutions don't, well, as far as I know. Average day, you're very focused on average daily range, which is good, but the focus on average daily range is not about who uses it. It's about what it is. It is just a measurement of this particular instrument's average movement on a daily basis. So it shows you on a normal day roughly whereabouts it will tend to get to before it stops moving. The reason ADR exists is because the banks have a limited amount of funds that they can execute on a daily basis. If we have to execute $25 million of long transactions in a hedge for a Japanese company selling something somewhere else, they will execute that 25 million in multiple orders, right? So the banks will have a book every day. They've got to execute an amount of transactions. They can't do it all in one day because there's not enough liquidity in the market for them to execute every single order. So they will break all orders down into smaller parts, trends, because they can't do everything that needs to be done. So there's a finite amount of movement that will happen in a day. When you get excessive movement beyond that, it's usually caused by either a fundamental event, meaning that there's been a shift and money has been pulled out of one asset and put into another asset, causing a larger movement, or it is a sort of, not as much a parity, a pairing of two currencies where they're both being manipulated at the same time in opposite directions. And what that does is it makes movement stronger, faster. Yeah. But the same amount of money is being executed. It's just that someone's executing in one direction while someone's executing the other, and you get faster movement. So we hit a larger range than our average daily range. But the same thing happens when you get to these levels. It starts to slow. Look at oil yesterday. ADR is 35. So the low there to the high 35. So 35 was here. Yeah, that's where ADR was yesterday. 35 pips from the low, and then it stopped because this massive strong push, they literally just run out of orders to execute. And if there's enough people that are speculative and want to take profit, they will start to sell their oil positions and pull it back down again. Doesn't mean we're not going to continue going up. All it means is it's just got exhausted. It's just a measure of exhaustion. RSI is a measure of exhaustion. You know, these dashboards, this is the ADR dash. Euro Swiss and Euro Yen. What do you think the Euro Swiss and Euro Yen RSI dashboards are going to say? Oh, they're not. We're probably in the wrong spot. I was hoping they were going to be extended. But you will find, if we look at those, Euro Swiss, that's because it's the hourly. Yeah, I was going to say, look at the M15. Euro Swiss has hit ADR high because there's been a strong movement to the upside. From here, to get all the way up to ADR means we've got a strong movement. So you find that your RSI gets extended as well if you're monitoring the M15 dash. So if you want to use ADR, you can use the ADR dash or the ADR indicator, but you can also use RSI. RSI tells you that there's been a strong move. It's just a measurement. It measures a distance. That's all it is. It measures strength of movement in one direction or the other. But look what's happened when we got to ADR. Yeah. So we pushed up and look what happened. ADR high is there. Yeah. This green line. Yeah. Look what happens when we got to ADR. Massive rejection. Try it again. Massive rejection. M pattern reversal. I haven't got the reversal alert yet, but that's what it will be. because it's already done. You know, there's only a certain amount of money and transactions that people want to do between these two currencies. And if they all happen by London, there's none left. Exhausted. And this is why we measure it, because it tells us where we're likely to stop moving for the day. And if you've got a long, you know, if I'm short here, right? If this thing collapses down, right, and gets to yesterday's low, I'm going to get out. Why? Because it's yesterday's low and there's a large probability there's limit orders sitting here. We know there is, because the last time we got here, they bounced. High probability there's limits sitting there. And we're very close to its average daily range. So it's to get down there, it's probably going to be exhausted. That's where I'll be getting out of those positions. Use your TP. Yeah, set your TPs there. I'm out of Euro US dollar there. Because I'd rather be out and put that in my bank. Yeah, so transfer that into my P&L. Yeah, than it bounce there, come back to my average, and me just sit here and hold this position again. My job is to make money, is to move this stuff over to there every day. That's your job, just to take this stuff when it's working. So like right now, I could bank that, and move this over here and sit on 0.4 something %, which is what you should do. But you know, I'm sitting in a, if this yesterday hadn't happened, I would be banking that today. But yeah, but you know, you use ADR as a gauge. Yeah, when we get in there, it's time to get out, probably. But equally, how many times have we seen this lit up like a Christmas tree? Yeah, the ADR dash. We get 200% days. But the reason we get these days is because there's usually something fundamental happening, like a news release, an interest rate, an inflation figure, a bomb landing on a country that is in NATO, or intervention from Japan with the yen or something. When we get these levels, it's because something really wrong has happened, or two currencies are being massively manipulated at the same time in opposite directions. Yeah, and you'll see like this one will be lit up like a Christmas tree. All the other euros will be here. Reason being is because somebody is manipulating the Swiss franc and other people are manipulating the euros. So this one will move twice as far. That's where we want to be getting in. If you get 150, 175 ADR hit, you know, it says it on the indicator. Yeah. Only gets beyond that 6% of the time. What's your odds? 94. It's either going to do that or that with a 94% probability. We don't know what though, do we? Again, just because it gets there, it's not a magic indicator. It doesn't tell you it's coming down. It tells you the probabilities of something happening. What's going to happen next? I have no clue. If you'd have got here yesterday, actually, let's do this the other way around, make it realistic. If you'd have got here yesterday and it was doing that, and you'd taken a long position, would you have made money or lost money? Would you be in profit or drawdown now? You'd be in massive drawdown. Why? Because a bomb landed in Poland. And this thing would have gone, if it was at that extension already, it would have gone to 250, 300 ADR. Because people are just exiting positions in the euro, dump the euro. And the reason we get these massive moves like this, these huge candles, is not because the people exiting these positions want to sell it down to here. It's because they will take whatever price is available. This is a slippage candle. Propulsion is slippage. I want to go short with 2 million. Well, there's only 1.2 million people want to buy it. There's a big order down there we can fill the rest of it at. Are you happy with that? Yeah, just sell the crap out of it. I'll take whatever price you can get on the way down and we'll fulfill the order there. Thank you. Done. Every time one button is hit, the other button has got to be hit in the opposite direction, hasn't it? Big candles on news events are just slippage. That's all they are, propulsion, caused by lack of liquidity. If you think about it, if 50% of the people wanted to buy it and 50% of the people wanted to sell at the same time, what would the price do? Literally, it would do that forever. To be able to get the market to move in one direction or the other, we have to have an imbalance of buyers and sellers. Otherwise, it's flatlined. Price would never move, would it? And that's what you're seeing playing out on the chart. Over a period of X time, how many buyers and sellers were participating and what price could do. That's literally, and this is why you're saying the markets don't, market makers, institutions, they don't use candlestick charts. It doesn't make any difference what's happened over a period of time. What they're interested in is where they need to get to execute orders to make profit on their positions. If we want to make 1% and 1% is there, we're going to push price up to there. They control it. 10 banks. We are on long for the ride, aren't we? What are my thoughts on Euro US dollar? I'm short at the moment because we've had this big strong push. So we had a push, profit take, push, looking for a profit take move. Long term, I'm short euro, long US dollar. So my bias is also short. But like the DAX, this thing's a lot stronger. Look at that. My break-even line has formed a perfect support resistance. So yeah, short. But the short move is going to be based on US dollar strength or World War III. Doesn't matter which. One or the other is going to come soon enough. But if it doesn't, and this is, and again, bringing myself back to why I trade the way I trade, if it doesn't, if it goes up to here, doing a bigger chart so you can see. Right. So I'm in two positions now. If this moves up 125 ADR today, I'll take another short there. Yeah. And then tomorrow, when it does that, yeah, when it does that sort of movement, I will get out of the positions with a profit. Just because I'm wrong today doesn't mean I should give the market my money. It means I'm wrong today, temporarily wrong. Have you found any use for cumulative volume delta? Yeah, I use cumulative delta in my futures trading, but I don't use it much, to be honest. I like cumulative delta on my side. I don't not trade because of cumulative delta. So I just trade whatever moves, basically. If it moves, it moves. This is the same. Scalping in futures, I'm scalping the ladder. I'm interested in market momentum. If I'm seeing large orders executed and pushes, and then pullbacks and pushes and pullbacks and pushes on the tick chart, and this could happen within 5 minutes, I'm scalping like that. Cumulative delta on my side is a bonus, but I'm interested in which way the market's moving. There's lots of different ways to trade. Use it or don't use it. Is New Zealand dollar, US dollar good for short? Good for short near term. Well, what's near term? I don't know what near term is. What's going to happen to New Zealand dollar, US dollar will be determined this afternoon at 1:30. I can't tell you. If this comes out as green, New Zealand dollar, US dollar will go down. If this comes out as red, New Zealand dollar, US dollar will go up. So short term, it's going to go up or down at 1:30 this afternoon. Am I labouring the point that nobody knows what's happening in the market or knows what's going to happen? Anyway, so yeah, I've covered lots of stuff this morning. My voice is getting really sore now. So we've got a couple of ADRs. We'll just quickly whiz through the dashboard. There's nothing on the dashes really. I was going to go through every pair today. If anybody wants me to look at specific pairs, do you want to shout them out now? Because we've been on for an hour and a half, no, 2 hours, and haven't actually done any analysis. I don't really want to spend an hour going for analysis now. I'll do it tomorrow. But if you've got any position, any charts that you want to look at, chuck them in the chat now. Any specific ones, and I'll look at them. Sorry, my voice is going now. So yeah, Euro Swiss hit ADR. So again, I took that little trade for fun with a stop loss. Yeah, at ADR. It's either going to work or it's not. But that's an ADR hit to the upside. Long term, obviously, we're in a downtrend on Euro Swiss at the moment. No reason why that shouldn't continue. The euro is going to be weaker than the Swiss franc long term. So it's in a good spot at the moment for shorts. So good ADR hit to the upside on that one. We've got euro yen. Again, yen I've no idea on still. There's been no more news on the yen. Oh, there you go, Kuroda. Scheduled to appear at Parliament on Friday. But there's no other news on the yen. High precision, Russia's just saying high precision strikes were carried out only on Ukrainian territory with no closer than 35 kilometers from the border. Yeah, I think that's, I don't know, I think that's probably likely, don't you? It's more likely than Russia wanting to actually go mental and kill everybody. Anyway. So you got those. We've got a weekly hit as well, Aussie CAD. As you can see, where are we? Monday. There. So it's hit its average weekly range. Yeah, it's done 166 pips to the upside, 167 pips, 149 is its average weekly range. So again, you know, this is what normally happens in a normal week. It moves roughly 150 odd pips. It's done that and it stopped. Yeah, doesn't mean it's going to come down. Just means we've done our weekly range. How you use that information is up to you, but it's done that. So there's a good chance of a reversal. So if you'd have got in at 149, right? So 149 ADR was there. Pretty much the base of that candle. Yeah, well, just roughly about there, yeah. So on a smaller time frame, yesterday when it got up to there, you'd had your weekly range alert. Could have shorted it. Yeah. And you also had an ADR yesterday by the looks of things. What was it? 99. 74. You didn't get ADR yesterday, but so yeah. Okay, that's how you use it. It doesn't matter, like you say, your weekly range, your daily range, your monthly ranges, they're just what it does on a day, week, or month on average. Aussie CAD is extended also on the 4 hour, which you would expect because we had this initial push, an accumulation, and then a push. So we're very nicely extended Aussie CAD for shorts. As soon as we get some US dollar strength coming through, that's going to drive the CAD. We've also got CAD CPI this afternoon as well. So you've got big movement potentially on the CAD. If we get positive figures, which are forecast, we should get some decent movement off of the CAD this afternoon. It looks like it's highly likely we're going to get inflation up, which will drive CAD up, which will drive Aussie CAD down. So this is a good one to take as a reversal. Obviously, if you're planning a position on this, you can get in your first position there. If it pushes up, you've got other resistance levels potentially for second and third positions to bring your average in. And this is massively extended. Obviously, we've not had a profit take on this thing at all in that whole move, which is 350 pips. So it's 3.5 ADR with no profit take. Yeah, we're due. We're definitely due a profit take move on that. Aussie CAD, good for shorts. Aussie US, excuse me. Again, weak US dollar. Everything's taking advantage of it. That won't last. We will get some strength coming through on that. New Zealand dollar CAD, massive extension. I'm in too short on this one at the moment. So yeah, I'm already short. I got in short here. Again, was looking for this to be a small extension above the 72 before next leg down. Yeah. We didn't get it. We're pushing a little bit harder. So again, this has all been caused by CAD week with the US, and eventually that's going to stop. But we got this nice resistance coming up. So I'll be looking for some kind of limit order reaction at that level, and obviously some kind of profit take on that move. And obviously then if it continues to do that, I don't care. And this is the whole point about position trading. I don't care whether this goes up or it comes down. You know, if that's the next target or that's the next target, I have no interest whatsoever in where it's going next. I'm interested in it moving. Yeah, as long as it moves, I make money. Yeah, it's when it does that parabolic, that's when we're in trouble. We just deal with it. So as long as it has a reaction, that's fine. New Zealand CAD and New Zealand US, again, same thing. US dollar weakness, waiting for some strength. We've got two catalysts on this. New Zealand US, US dollar CAD, we've got two catalysts on this afternoon, but it's all coming out at 1:30, so that's what you need to be paying attention to this afternoon. And obviously that as well. I'm not sure that's going to move too much this afternoon, just while we're looking at it. Because obviously this is what the market's waiting for, but we may get some hints in there which might start a movement. So just be aware if you've got any pound on. There's nothing on the hourlies at all on the RSI extensions to look at. So that's all we've got on the 4 hours. Some good opportunities to get into some new positions there. I'm fully exposed at the moment, so nothing I can really take. GU, so pound US dollar. Obviously, we are in a massive downtrend. So pound US dollar, I was short on this here, as you can see, and I got out of everything. If you're still in this, or you've just got into this on that extension, or you might have been in it from, I mean, if you're in it from that extension, you're out. If you're in it from here, I guess, is where you would have got in. Obviously, we've had a strong push, but if you look at it, it's only an ADR move really that we've put in, so it hasn't actually gone a massive distance yet. The problem with this one is obviously long term. You could have been in from there actually. Well, you've been out there. Yeah, if you're in this, you shouldn't really be in it for any long period of time. But we've got this resistance area, which has roughly been hit, hasn't it? Where did we stop? Let's have a look at where we stopped. Yeah, so we've stopped at a decent area historically of support resistance. So I can see why we've had a reaction there. The problem with this one is obviously it's totally out of everybody's hands, and we're not going to know what's going on with this particular pair until tomorrow. So this afternoon, retail will move it. Tomorrow, the autumn statement stroke budget will move it. So worst case scenario is we get negative retail figures and we get a load of bullish sentiment and the market loving what Jeremy Hunt says tomorrow. So negative retail figures, GU is going to go up. Positive Jeremy Hunt, GU is going to go up. So, you know, I have no idea. It's extended at the moment. The market is certainly factoring in positive movement. So they're happy after Liz Truss and the Bank of England intervention. We've had positive movement, but we've also had a massively weak US dollar. So it's difficult to tell exactly what this movement to the upside is. I don't think this is necessarily the market factoring in positive movement on the pound. If you look at the other pound pairs, yeah, we're kind of sideways bearish, sideways range bound, sideways bearish. Obviously yen, we can, no idea, it's now down to the yen. Pound New Zealand is bearish. Pound US dollar is bullish because US dollar weakness. So the pound isn't actually factoring in any movement to the upside at all. The market is unsure what to do with it, which is not surprising. We've been sitting here with a rudderless ship for 6 weeks with no fiscal policy. So why would it go anywhere at all? So you're driven by the US dollar really, and the pound statement tomorrow. So I can't, don't know. I would like to say down. Long term, there is no reason why the pound should be stronger than the US dollar. The US will lead into recession, and the US will exit from recession faster. The recession in the UK at the moment is a lot worse than the rest of the world. Our inflation figures this morning, 11%. Unbelievable. And forecast to get higher. So US is lagging us in bad economy at the moment. So Jeremy Hunt's got to do something very, very, very convincing to shore up the market tomorrow. I'm not sure that he's got enough in the pot to do it, but we'll see. So pound US, don't know. US dollar CAD, you want to look at as well? US dollar CAD, I'm long on US dollar strength, and Canadian. This is again a difficult one. Again, it's an economic thing. The US economy will typically trump, excuse the pun, seeing as he just ran again yesterday, didn't he? The Canadian economy. So you can see from this one, it's normally range bound because these two are such close bed partners from an economic perspective. Oil exports and imports between each other, it's all very stable. We get the US pumping, and I don't think we're going to get that sort of movement, really. I think what we're more likely to do is go into this sort of slight upward channel or range bound. So buying from down at this level here while we're extended, I think is probably a decent idea. And then if it goes range bound, fine, I make money. If it goes to the moon, fine, I make money. If it comes down, we're coming down into an area, multiple areas of balance where we've been happy to transact in the past. So we're going to get some kind of reaction, which is going to do that. And if it does that, and I've scaled in, I'll have an exit up here. So it's a pretty safe trade, I think, at the moment. Even if we do get negative retail today and we get some push down on the US, I'm going to scale in, obviously, and wait for that pullback. So I like it as a long term, though. I think you should be certainly slightly more bullish on the US. So I'll be looking for us to come up and challenge the RSIs. And to do that, they need to buy. So gold. I don't trade gold. I have traded gold a little bit, and it didn't go well. You see my gold trades, look. Mr. Scaredy Cat on gold. I'm so glad I got out of it as well, because look what happened. But that was, US dollar. So yeah, I got these little scalped a little bit of gold and then ran. So I'm not interested. But yeah, fundamentally, short, obviously, at the minute. We've had this massive push, which is obviously this US dollar weakness. We've also had some gold strength as well. But it's a commodity that is driven by fundamentals of supply and demand, and it's not been playing ball with the rules of supply and demand. So typically when you've got a lot of gold constriction, which we have with the Russian export ban, considering they hold a vast amount of gold, you would expect, because supply is constrained, that prices would rise, but it hasn't. It's come down. So it's driven by the US dollar. So whatever the US dollar is doing, it will go in the opposite direction. So retail positive today will drive gold down. Long term, I would say keep coming down, but that is assuming that US dollar keeps going up. But yeah, don't know. I mean, we've broken back above obviously the moving average, so that's because of this strength of movement, but it can easily just break straight back down below and start a new leg, can't it? Very extended, so I'd be looking for shorts on it. Yeah, someone else wants to look at gold as well. Do you believe you can master one pair? Well, yeah. I mean, if you every instrument has its own way of moving. If when you're talking about Forex, there's only a certain number of observable facts about an FX pair, and that is what its average movement is, which you will find some pairs are always very small, like Aussie New Zealand. Aussie New Zealand never gets above 100 ADR, just doesn't get there. Because these guys are close neighbours and trade partners, we get a lot of range bound activity. So pairs like Aussie New Zealand that move only in the Asian session normally, they have a bias to be range bound, yeah, until that bias changes and they become trend bound. So how can you master something that trends and ranges? It's just like anything else, isn't it? With FX, you've always got two drivers, one pair against another pair. So the fundamentals of each of those affect how this thing reacts. So, you know, when you say mastering something, you can observe how price moves on it. But again, everything has structure. Market structure is everywhere. So I don't believe in mastering one pair. Let's say, for example, you're a trend trader, right? Okay. So if you're a trend trader and you are mastering Aussie New Zealand from June until July, for that entire month, you don't take any trades because it's not trending. So you can be a master of nothing, which is why I believe, well, I personally believe that you can trade anything. Why limit yourself to something that might not move? So if you're a DAX specialist, you've been driven absolutely nuts by the DAX for the last couple of days, haven't you? Yeah, sideways, sideways, sideways. Fundamental impact. Yeah. Is that what the DAX normally does? No. You know, there's no, I don't think there is any, you can't master something that's random, can you? This is driven by fundamentals of 40 stocks and worldwide events. How can you master what BMW is going to do next quarter? Because BMW makes up a large part of this. SAP, the software company, they are the number one stock on DAX. How can you master what the S&P's earnings report is going to be next quarter? Because it's going to have an impact on whether this thing goes into a trend or ranges or drops. Price action is the same everywhere. The market's a fractal. Everything goes up and down and sideways. So I don't know. You can certainly become better at an individual currency or instrument by seeing what it does on a daily basis. But what it does on a daily basis changes. You know, some you look at the I have hunted for strategies on the DAX using every conceivable price action and habit that you can get at the open. Yeah. So, you know, you look at the open on the DAX today, right? I have set up EAs to trade everything you could possibly imagine. and they've all got a very slight edge, but none of them you can master. So the opening range, the opening 5 minute, the cash balance opening 5 minute range breakout, yeah, today was short, and I took it, didn't I? And it worked. This will work. Oh, where's my stats? That's historic. Right, I'll give you the stats. This is a spreadsheet with lots of statistics in it. I'm not going to go through it all, but here you go. Let's look at some of it, right? This is over 12 years, right? The DAX, and this is me trying to master the DAX, okay? The DAX gaps up 55% of the time, and it gaps down 44% of the time. Yeah. When it gaps up, those gaps are filled 60% of the time. When it gaps down, those gaps are filled 60% of the time. If it gaps up and closes up, that happens 53% of the time. If it gaps down and closes down, that happens 48% of the time. Look at this. Is there an edge there? Not really, is there? Yeah. There's not really an edge. Maximum gap up is 500 pips. Maximum gap down is 1,000. Yeah, the average gap up is 53. The average gap down is 57. There's no continuity or parity that I can use to my advantage there. If it gaps up over 100 points, yeah, it does that 7% of the time. Those gaps get filled only 23% of the time. So if it gaps up by 100 points, I know that we're probably not going to fill the gap. 23% of the time it will. But does that tell me which way to trade it? No. So if the market opens there and it gaps up 100 points, at the open, do I go long or short? Yeah. I know it's unlikely to do that, but that doesn't mean it won't do that. Or that. Or that. Yeah. What happens at the open? Statistics give me no indication of whatsoever. And I've done this on this is what I do, yeah, when I'm not here live trading or analyzing or doing whatever I'm doing, I spend my time doing statistical analysis to degrees you probably would need a math degree for, right? To find out whether there are edges. And there are no edges. If there were edges in the market statistically that you could execute, I'd be executing them. Yeah. So to answer the question, can you master something? Probably can. And I'm pretty good at scalping the DAX. But I'm using what is happening now to tell me what to do, not anything else. Yeah. And if I'm wrong, right? So, look at these statistics. If this thing was to gap up over, let's say we got a gap up of 200 pips on the DAX, right? I know there's a tiny chance of it filling that gap. So what's my bias for the day? Yeah. I don't know until the market's opened what my bias for the day is, because I don't know which way the market's going to go. If it flies to the upside, I'd be thinking, well, it's gapped up 200 pips. There's a lot of buyers in the market, so I should get on long with them. If it does that and then collapses down and I get an opening range breakout to the downside that fills that gap, it's going to happen 13% of the time. Does it help me? No, not really. Because when you're scalping something, you go with what is happening. When you're position trading something, yeah, you go with what we know plays out over and over again historically. What happens when we get to certain levels? So I don't think it matters if you become an expert in yen movement. Again, it brings me back to the old, if it moves, I can trade it. Yeah. People say, why don't you trade the S&P? Why should I? Why not trade the Dow or it doesn't matter which of these you pick. Trade that one, or that one. Very little difference. Well, there is at the moment because the Dow's out of sync, but there's not a lot of difference, is there? So this one moves more. Yeah, this moves 98 a day. This moves 375 a day. I'm going to get more opportunities on the NASDAQ, so I'll trade that. I'm not a master at this. I think you need to master price action. You need to master market structure. You need to master understanding of fundamentals. The rest of it, if I can trade this, I can trade the 10-year note, I could trade oil, I can trade anything. But there are certain instruments that you don't get on with. Gold is one of my nemesises. Every time I try and trade this thing, I get stung. But it's because it doesn't move normally. It does these crazy things. And it's like the exotic pairs. If you look at the exotics, like the ZAR, yeah, I don't trade this because it moves 3,000 pips in a day. And there's so little liquidity in it. The moves are so violent, you can get destroyed. But look at it, right? And it does the same thing. Yeah. Market structure, market reversal, accumulation, pullbacks on extended buying cycles, pushes off of extended sell cycles, which is probably coming. You want to be looking to buy probably on this thing. Just had a reversal out as well. But, I don't trade this. But why become a specialist in the ZAR? It's all the same stuff, isn't it? I think that's just my, take on it. It doesn't matter what it is. What I need to see is it doing the same thing over and over again. And I need to see it moving in a way that allows me to. My edge is basically not losing money. That's the edge, isn't it? Really, think about it. I don't do what 95% of people do. Give the market my money in the form of a stop loss. So therefore, I don't have the same problems that other traders are, which means I don't have to become a specialist. But if you want to use a stop on something, again, ATR is all you need to know. Yeah, or ADR. If something moves up to its average daily range, that's a good. It doesn't matter what the instrument is. If you get the ADR dash, put whatever you like in the ADR dash. Put, open 4 dashes with 30 instruments in each if you want to. It doesn't matter what the instrument is. If it has exceeded what it normally does, there's a high probability that the people who want to take profit on the move that they just created, isn't there? It's just how market movement is. And I don't think I need to know the ins and outs of the US dollar Swiss movement on a day-to-day basis. Not a crime to sit out of a consolidation. Many say doing nothing is also a position. Yeah, it is. You're long, short, or flat. There's only 3 positions in the market: long, short, and flat. Flat doesn't make you money. So therefore, it's not a crime to sit out of a consolidation, no. But if you're a specialist in an instrument that is consolidating, and you're a trend trader, for example, you're not going to trade it. If you're a trend trader, if you're a mean reversion trader and something's trending like mad, you're waiting for a range to build, a range to form, you're not going to trade it. So if you're a specialist in that, you need to be a specialist in something else as well, because while one thing's doing nothing and you can't find an entry, it's like a system or a strategy, right? Let's say, for example, your strategy is I'm only going to trade shorts and longs on hourly 14 RSI extensions that get to 80 or 20, right? You're flat at the moment. You've got no positions on. If we sit here for 3 weeks and the market goes flat and you don't get any 14 RSI extensions on the 80-20, how are you going to pay your mortgage this month? You're not going to pay your mortgage this month, are you? Because you're not earning any money. So again, it's the same sort of thing as becoming a specialist in one instrument. You can't become a specialist in one strategy either. Yeah, this is why I have taken more to scalping of recent in the last year, because we've got a flatter market with less RSI extensions. Therefore, I'm finding less opportunities. And I've been sitting there looking at my P&L flat going, I need to get some money from somewhere. So I'm going to do a different strategy. So this strategy, when this strategy is not working, that strategy might be working. When that strategy is not working, this strategy might be working. When this strategy is not working, I'll go and scalp. So again, don't become a specialist in one strategy either. Trade multiple strategies, because you might find something doesn't take a trade for a month. So all these EAs that are specialized, like the gold EA or whatever it's called, you know, there's EAs that specialize in gold. What happens if all of a sudden they shut down the gold exchange because World War III starts, and there can be no import or export of gold from any country in Europe or America? What do you think is going to happen to the gold price? It's going to go flat. So if your entire income is based on that gold EA, you've got to find another income. Like not in a couple of months' time, now, today, because you need to earn money to pay the mortgage this month. So you can't specialize in it, can you? I suppose specialism and mastery are different things. Perhaps not mastery in terms of prediction, more in the sense of better results from less exposure and better focus, less mistakes. Again, this is why this dash is here. Yeah. This is my version of focus. Exposure. Don't overexpose yourself to something. Spread it. Yeah. Don't forget, you know, I keep saying it. We don't know. I don't know if the DAX is going to push further or not. I have no idea. Everything is pointing to a no, from a fundamental, from a long-term overview, from a short-term overview on the 4-hour chart right now, to a propulsion gap needing a pullback. Everything is saying right now we are due some downside movement on the DAX. It may or may not happen, but if that doesn't happen today, that might happen today, or that might happen today, or that might happen today. I can't time any of it, but I can have a view on it. I'm not a specialist in any of this at all. I'm just taking positions when things are at levels I think we've got a chance of something happening. You know, and this is why I do what I do in the way that I do it, because I've spent 14 years trying to find the system and strategy that works for me, and I couldn't find it. And then I suddenly realized it's not the system or the strategy that's at fault. It's the way that I'm trying to extract money out of this market. Yeah. You know, and then you talk to people in banks, you talk to people that have worked on prop desks and worked on market maker desks, and you talk to people that have worked in brokerages, and you realize that the whole industry moves around stop and limit orders. That's the whole industry. Its purpose is to go and take limit and stop orders to find liquidity. When you realize that the entire market is looking for liquidity, and then you suddenly put 2 and 2 together and go, hang on a minute, every time I put an order in the market with a stop, it's liquidity. You suddenly think, well, when it gets up there, it's obviously going to move because it's got my liquidity. So if I don't put it in there, it's still going to move, and I just won't have the loss. And if I stop making less losses, I'm going to make more profit. And then all of a sudden the penny drops and you're like, I understand how the market works. And that's all you need to know. How you get in, why you press a button, what indicator you use, what system or strategy you have, whether you have 10 strategies, 1 strategy, 20 instruments, or 1 instrument is irrelevant. How you trade the market that is what makes you the money, not how you do it. And that's the light bulb moment for most people. And that's what the bootcamp is designed to explain. And whether you like it or hate it, again, is, you know, there's people out there scalping with stops, absolutely killing it. I kill it sometimes, but I couldn't kill it consistently. And that's what you need, consistency. And the people that I think benefit from the bootcamp that tell me they make money position trading are the ones that have got the same mindset as me. And that is the scalping tires me out, drives me nuts, and I don't enjoy it, but it's a means to an end. This is me. This is my stress-free trading. This is stress-free. The fact that this thing here is sitting in £160 of drawdown is neither here or there. Doesn't matter. I could shut this quite happily now, walk away and go, I couldn't give a monkey's. I'm going to lose 160 quid out of the 2 grand I've made. It's if I get in here, right? If I get in here short now, right, with that stop, immediately I'm thinking, right, I'm on edge, because if this pushes up to here to this high, I'm in drawdown. I'm on edge. If we push above there, I'm really worried about it. Yeah, because I know that it's not going to be long before I'm going to lose 0.1% of my account, because I've told the market, if you get there, take my money away from me. That's so stressful. That going further up there and becoming $250 or $350 isn't stressful, because I know if it gets all the way up there, it's got to come down at some point. Because if it doesn't come down, it means that nobody that's done that is making any money. And the market always makes money. Otherwise, it wouldn't be there, would it? I've seen that getting really good at just one thing in this business can afford you a great living. Yeah. The thing, and again, this is the realization with scalping, right? I've had one trade today. I mean, I haven't really traded. I haven't scalped today, have I? I've taken one trade today, which was a lovely little trade, wasn't it? So let's pop it on the chart there. So I took that short. This is obviously with a silly lot size, because I was just proving a point that I have no idea where it's going. I took that, I added to it, and I got out down there. Right, lovely little trade. Does it make me a good trader? You say I'm just labouring the point. Getting really good at something can afford you a great living. I'm not a great trader. I'm great at managing my risk. You saw me have risk there. You saw me add a position on there, move my positions to break even. So I had a risk. I moved my risk. And as we pushed down, I would move my risk, and then I would get out with my reward. Am I waiting for this thing to do the gap fill? No, I didn't. I just got out because that's where I said somewhere around here. Yeah. Doesn't make me good, bad, indifferent, or anything. But what I've done now is stop trading. That's what makes you a great living. And that's the other thing that prop firms rely on, is the greed. Yeah. Excellent. Now, if I get in short here and it comes down to here and I get out here, which is what I would probably do in this case, there's my position there. So yeah, I just move that down to there and just take a double bottom. Quick double bottom play. We must stop down and reduce the risk on that. If that works out, yeah, what am I now? An awesome trader. What level am I on? 4. Walking on water. I'm unstoppable. Right. I'm only, what am I now? 2% away from finishing my evaluation. Tell you what we'll do. Let's knock it up to 2%. Let's just get one more trade in. Bang. Lost 2%. So I've lost all of today's money. I'm back to square one because I kept on trading. If you get that one trade, opening range breakouts, and this is why I'm still focused on these. If you get your opening range breakout and it works, and you get an opening range breakout into a trend day, like we've got sort of here. Don't know if it's going to be a trend day yet or not, but it looks like it. That's it. You're done for the day. Stop. All right. So people you'll see on adverts say this thing to you. I made X number of pips, and the best thing was I was done in 30 minutes. I'm done in 30 minutes a day. And what they actually mean is you're going to trade at a time, you're going to take a trade, and it's either going to work or not. You're not done in 30 minutes, because if that trade you take stops out, you've made a loss. What have you got to do now? Keep trading. Why? Because you've got to earn money. So if you stop after you've taken a loss, yeah, you've got to carry on. So right, what I do is I take a trade. If it works, I'm done. I go off and do something else. If I take a trade and it stops me out, I might take that breakout and it might move like that. Yeah, and then at sort of 12:30 or something, we might be there. So I might close that out at 12:30. What have I just done? Worked all morning for break even. That's the reality of scalping, and which is why I don't like it very much, because it's sold on the premise of work for half an hour a day, work for an hour a day, done and dusted. You've only got to do 2 hours a day to earn $2,000. You can do that some days, but the other days you'll be working from 8 in the morning until 6. I've been sitting here at 6:30 at night on the sofa managing scalp positions I'd taken in the New York Open because it hadn't moved far enough. I'm still working at 6:30 on the sofa having my dinner because I haven't got paid today. So I have to keep going until I get paid. Yeah. What makes you a great living is identifying that when you've done that today, stop. And what do prop firms, and especially with E8 now, unfortunately, these prop firms that are removing these limits, so you can pass an evaluation in a day, which I did last month, didn't I? What that promotes is over trading. They want to get you into the mindset that you keep going. If you can make $2,000 on that trade, why not take the next one down to there and make $4,000? Because that one's going to stop you out and you're going to lose 50% of that profit, which is going to annoy you. You're not going to stop there now, are you? You're going to take another trade, which will probably go into a loss. Before you know it, you've blown the account, you're back to square one, you're paying them another valuation fee. It's all about psychology. The whole prop evaluation, the dream that they're selling, everything is all about mindset. And you've got to change your mindset completely out of that. I'm going to get a 100K account and I'm going to draw out 10 grand out of it every month. Not as a scalper, you're not. As a swinger, maybe. But again, it's still very, very, very difficult, isn't it? But anyway, that all came about from obviously focusing on one chart, one instrument, or becoming a specialist in something. And I don't think you can. I was thinking of that line. Where did I draw that line? There's a big red line on my chart. Oh, it's gone. Oh, there it is there. Right. So yeah, there you go. There's a nice little scalp. But I'm not in a lot of profit. I'm not in any profit on this really at the moment. Because it's a tiny little position, but you get the point. I've seen that you're getting really good at just one. Oh yeah, sorry. Just going to close that one out. Actually, I'm just going to move stop to break even on it. I don't want that position on because it's a scalp position, but it's a similar size to what I'm position trading with at the moment. So I don't want 2 positions on, but I'll take that off down there. Make a 10 or something. It works out. Right, that's all I've got for you today. My voice is getting very hoarse as well now. Still got a sore throat. Lingering. Well, I say it's lingering. I've only just got over it. So I'll be back tomorrow morning, same time. We will have a good look through all the pairs, but we've had a lot of chats this morning. So Cashflow EA have added a 3-step challenge now. Seems a bit pointless. It's cheaper, that's why. I've done the EA 3-step. It's just cheaper. So it's just a cheaper route to market for you, basically. You just got to jump through more hoops. So you've got to have 3 lucky streaks instead of 2. So it is a bit pointless, but it's a cheaper option. So if you want it, it's there. Oh, I think they've stopped it. Oh no, it's EH. Yeah, it's EH track, isn't it? So 100K is 358 and a normal 100K is 588. So it's just cheaper, but you got to do more for it. Okay, so there's E8 and Elevate. That's got 3 phases, but you pay less. You know, horses for courses. Pick the one that you can afford at the end of the day. But most people, you know, if you that is a lot of capital. And some of the people that are passing these evaluations, you know, if you look at the stats in E8, when you get an account, go and look at the stats on people and their payouts on these £250,000 accounts. People being paid out $60,000, $70,000. They're totally gambling. All they're doing is they're taking a short with 5% risk. Stop there on a 5-minute chart, getting a lucky move, moving it to break even, and capturing a move like yesterday. They're capturing one of these DAX movements. Yeah. Boom. You know, if you'd have gone short there with a 5% risk, well, you can work it out. 20 to 40. So that's a 50% return on our 250k account. 100 grand there. That one move, 100 grand. That's you done for the year. And people, this is what people are doing with these accounts. Yeah, that's the other thing you do. That you can gamble with them if you want. You know, you can get a 50% return on one trade, no problem. You've got to be very lucky, and it's going to be 1 in a 50, 1 in 100. But you're going to get it, and you're going to land it, and it's going to work. So, so I'm getting loads of spam calls at the moment. I signed up on a website, a trading website, for a course, just for, you know, these free webinars. I just signed up for a free webinar on. I see them every now and again, and it's something I've not seen before, so I just go, oh, I'll have a look at that. And ever since I signed up on that, my phone's been ringing literally 2 to 3 times a day. I've come to activate your trading account. What? And I just string them along for as long as I can. What's trading? Forex market and cryptocurrency. Oh, yeah, I've got a couple of quid I could put into that. Is £5 enough? And I just string them along for as long as I possibly can, and then hang up on them. All scammers, scammer brokers, basically. So you probably had them yourself. But yeah, anyway. Right, I'll leave it there. Anybody needs anything, come in the Telegram group. I will be in there. I'll be back tomorrow morning, same time. You can see what I've got on exposure-wise. I will post in the group if I close anything out. I'll be more active in the group now. I'm back to full strength. Well, not back to full strength, but feeling better anyway. So yeah, if you block when they call on other numbers, one account manager claimed he was a millionaire. What do you need? Why do you need my 250 quid? Yeah. Yeah, I know. I suspected spam. They're all mobile numbers as well. They use now. So, but they come up. Most of them come up as suspected spam on my phone anyway. But after I've hung up on them, I block them. But it doesn't stop. They never stop phoning, and eventually they give up. I've had some really, really good laughs with them. I put my son on, my 14-year-old. I put him on one of them, and he pretended to be me. And he knows what I do, so you know he had enough knowledge to string them along for a while. He had a great laugh with them. Then he suddenly turned around to them and said, "I'm only 14. Sorry, I've got to do my homework now." And they just hung up on him. Just yeah, the way I see it, if it wastes an hour of my time to waste an hour of their time so that they can't phone somebody else and scam them, I think it's payback, isn't it? I'd love stringing them along, just waste their time because all the time they're on the phone to me, they can't phone someone and scam them. So. But after a certain number of calls, I have to go. Like, I've got to get on. So I even went through the process of signing up on one of their websites because they take you to websites as well to get your card details and all that sort of stuff. And yeah, but I got to the point. Well, I strung him along. I said, I can't load your website. I'm sorry, I can't load your website. I'm googling you and I can't find you. Oh no, sorry, it's not on Google. So, what do you mean? You're a brokerage and you're not on Google? And then it all started falling apart from there, obviously, when I was trying to find this website that didn't exist. It was like, oh, okay, bye. So yeah, if you get any phone calls from anybody in anything to do with the FX market, either string them along or hang up and block the number, because every single phone call you receive is a scam. Unless you've asked for a phone call. But yeah, use your brains. Right, I'll see you tomorrow, guys. Same time, 7:50. Be aware of news this afternoon. 1:30. It's all going to kick off. We seem to be in a bit of a holding pattern at the moment, so all going off this afternoon. And obviously, just be aware of keep your eyes on financial juice for anything happening with Ukraine. I don't think anything will, but you'll see it move on the markets before you see it light up on here. But you'll need to know why it's moved. So I think we'll be all right. But you never know, do you? Okay, have a good one, guys. I'll see you tomorrow morning, same time, 7:50, and in the Telegram group. Other than that, have a good day.